of the regulatory norms. So that's also, throwing light on these trends that are emerging in the IPO market. With that, we'll cut across to the Global FinTech Fest, where Dinesh Khara is speaking and is in conversation with our colleague Ritu Singh.
So those are the people where there could be challenge. But yes, of course, if at all there is a adequate assessment in terms of the income flows and the certainty of the income flows and the EMIs, then perhaps it may not be as much of a challenge. So much of it will depend upon unsecured credit to which category of customer and how much. So that is something which is going to define and determine how this unsecured book is going to look like in the different banking.
Well, that's something to keep in mind. But, the other issue that's really dominating, the conversations among bankers is this scramble for deposits. And that's because, household savings typically, which would, stay in vanilla bank accounts, are moving out because there's more financialization. They're on the hunt for higher returns on their, savings, and also, of course, tax efficiency. Do you see a structural, problem emerging for the banking sector to tackle, with especially as we're seeing more and more banks look at the digital route, not so much as the physical footprint? Do you see this impacting credit growth as deposit continues to lag?
Well, this is something our Chief Economic Advisor, Dr. Soumyakanti Ghosh, has come out with a report, and which is actually based upon the RBI report, where he has analyzed that we have seen similar kind of a situation way back in 2003-04 also. And his assessment is that normally it takes anything up to 41 months for this divergence to get addressed. So I think our assessment was that by the June 25 or so, this should get addressed. But nevertheless, there are multiple options which are available to take care of the loan book growth, which I mentioned in the past for State Bank of India also. We had mobilized deposit at a point of time when nobody used to look at deposit during the COVID period. We have created an investment book, which is, even today also we have got investment book, which is almost about 3.7, 3.9 trillion. And we can easily unlock that investment and support the loan book growth. And of course, deposit is a franchise. Just to address that, in certain time buckets, we did tweak the interest rates. But yes, of course, any banker has to always strike a balance between the deposit cost and also the NIM. There's a trinity which needs to be met. So eventually, how to meet that trinity is nothing but a skill. So I think the skillful handling of the situation is something which will see the bankers sailing through the difficult times.
Reiterate what I shared with you the last time, that not only will there be more Chetaks in the market off the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform. As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales, production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Welcome back. You're watching Business Lunch, and markets holding strong at this particular point. And Reliance Industries also ahead of its AGM is maintaining its gain at this particular point. But of course, all eyes would be on Reliance Industries AGM. Now, moving forward with an important development, well, the market regulator SEBI has issued an advisory to the investors regarding the risks associated with the investing in SME stocks, and SEBI has identified troubling practices amongst some of the companies and their promoters. In fact, our colleague Sudarshan is right here with the details of this important advisory. Tell us, Sudarshan.
So just after market got closed yesterday, the market regulator SEBI had come out with an advisory which was related to investment in SME companies. So, but before I talk about the advisory, let's take a look at the performance of the BSE SME index. In 2024, the index is up almost 140%, and in last 1 year, it's up more than 200%. So what does SEBI say? It says SME platform was launched in 2012 to serve as an alternative source of raising funds for emerging businesses, and since 2012, more than rupees 14,000 crore was raised through this platform, and of which rupees 6,000 crore was raised just in 2024. So what does concern SEBI? SEBI says some SME companies or their promoters are resorting to certain means to project unrealistic picture of their businesses, and these companies make announcements that create a positive picture of business, and these announcements are typically followed up with various corporate announcements, and those corporate announcements are related to stock splits, bonus, preferential allotment or something else, and these actions create a positive sentiment amongst investors, and because of these actions, these investors buy shares, and because of that, shares go to elevated levels, and it gives an opportunity to their promoters to offload their holdings at elevated prices. Now, after that, SEBI come out with an advice to investors. It says it tells investors to be careful and watchful, and also tells them don't rely on unverified social media posts and not to invest based on tips or rumors. And after these announcements, we have got to know that one of the SME companies has delayed its IPO, and name of that company is Archit Noor, but company says it has delayed due to fresh queries raised by stock exchanges.
Interesting updates there, Sudarshan. Thanks a lot for that. Now, interesting that the IPO that we were talking about, that resourceful automotive, that 400 times subscription, listed exactly at its IPO price. You'd think that would happen at a hefty premium. It's not to be the case. Moving on then, SEBI chairperson Madhavi Puri Buch, while addressing the gathering at the Global FinTech Fest, spoke on approvals for FinTech IPOs and how SEBI was trying to smoothen the process of IPO approvals. Listen in.
We have been focusing on saying that if the fintech industry has reached a certain level of maturity and now they want to IPO, the private equity investors want to exit, the markets are good, this is the time when we should not be wasting time in giving approvals. So as you're seeing, compared to when we started tracking in March of 2022, and we had a very large number of IPO papers pending more than 3 months, today we have just 8. And most of those are really in the realm of where there is either a judicial intervention or there is a regulatory approval pending from another fellow regulator, and which is why they are still pending at our end. We ensure that people are not wanting and waiting for approvals when there is so much opportunity in the market. So any of the fintechs coming to register in this form will also see that this speed of approval should be there by SEBI. This speed and this, monitoring of aging is something that we've been doing more through restructuring of the organization and through process optimization. So we are hoping that, in fact, a lot of that aging that you saw, we can make it crash even further, because we will now actively use AI within SEBI itself in order to deliver this.
All right, let's also get you updates from the Hurun India Rich List for 2024. And for the first time, the Hurun India Rich List has broken past 1,500 members, with India's billionaires count now at 334 billionaires, with an average of one new billionaire being minted every 5 days as per the latest report. Now, Mukesh Ambani of Reliance Industries has a net worth of 10.1 lakh crore rupees. Bollywood and the entertainment industry has also made its mark in the rich list, with Shah Rukh Khan entering the list with a net worth of about 7,300 crore rupees. Juhi Chawla and family, Hrithik Roshan, Karan Johar and Amitabh Bachchan entering the list for the first time. So, Hormaz, what are we doing? One billionaire getting created each day now.
It's certainly not either of us for sure, at least for the time being. But with that, it's a wrap on this edition of Business Lunch from Nisha, me and the team that put this show together. Thank you so much for watching. Midcap Radar comes up next.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big
Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Ekta Batra, and the Nifty is now firmly above 25,100. It's approaching a 100-point gain. So the action is picking up now in afternoon session, and all eyes will be on the Reliance AGM. The countdown has begun.
Hi, Reema. Yes, absolutely. Well, the countdown has begun for the RIL AGM. And besides that, there is a pickup in the markets as well. So that seems to be positive at this point in time. Let's see if the mid-cap index manages to recover a little more from the losses that we're seeing as of now. But nonetheless, these are top stories. The markets moved to the day's high after a flat start. The Sensex and the Nifty gained 0.5% each, led by HDFC Bank, ITC and Reliance. Mid-caps underperformed.
The Competition Commission of India gives a nod for a merger of Reliance-controlled Viacom18 with Disney Star India. This portfolio paves the way for the creation of a world-class leader in sports and entertainment. Stocks of TV18 and Network 18 jump.
Power financiers REC and PFC surge on a bullish report by UBS, which implies a 25% upside for REC and a 17% upside for PFC.
Interglobe Aviation owner sees Indigo today has seen a big block deal. Trade of about 5.8% equity changes has as co-founder Rakesh Gangwal offloads another slice of his stake to rake in 10,000 crore rupees. His tally from such sales now stands at 27,000 crore and he still holds 13% in the airline.
Paytm also gains after it receives approval from the Finance Ministry to invest in Paytm Payment Services, allowing the company to resubmit its application to be a payments aggregator.
Well, just pull up that Nifty intraday chart. The big up move in the market happened somewhere around 12:30. And after that, markets have held on to all those gains. It's 25,150. It's literally a step up that we've seen in the markets in the last 1 hour. Now up 0.4%. Mid-caps, though, have trailed the frontliners. The mid-cap index is down 0.6%. Small-cap index is down a similar amount. The Nifty micro-cap index is a cut of 1%. The advanced decline ratio skewed in favor of the stocks which are under pressure. Stocks which have gained in the last 1 hour with that up move. You've got HDFC Bank, which is now back in the green. So that's trying to show a little bit of a pickup. ITC is up. The top gainers are Bajaj Finserv and Bajaj Finance. In fact, most of these FMCG names, whether it's ITC, HUL, Britannia, these are stocks with action right now.
Yes, absolutely. And not to mention that you did mention the Bajaj Finance twins, but separately Apollo Hospitals is also doing well today. That stock is up around 1.8%. And well, you can't go unnoticed. IT can't go unnoticed at this point. So HCL Tech is up around 1.5%. It's already picked up around 5% in terms of its market cap this week. Wipro also has picked up around 5% this week. At current reckoning, it's up around 0.7%. So that's what's taking place. There is definitely much more action in the frontliners today. But what is taking place in the mid-cap index? We have our mid-cap movers segment. We have Hormuz to take us through all what he's tracking.
It's all about the large caps today, isn't it? But you can't say the same for the broader markets, and the mid-cap index seeing some bit of selling pressure there. Almost all of these stocks on your screen currently at or near the lowest point of the day. Tube Investments, Nykaa, CDSL now down for the 4th day in a row. Another 4% shed today, and IRB Infra also nearing the day's low as well. It was the earnings all this while. Now it's block deals that is being the buzzword, and all of them took place today as well. Welspun Living is bearing the brunt of that, 6% lower now after the block deal, extending losses, but the other two seeing a fair bit of consolidation after the large deals that took place, be it Indigo or PB Fintech. A lot of companies have been reacting to deal wins, order wins, and they came in today or yesterday as well. KEC International now order inflow crossing 10,000 crore for FY25, 7% higher today. Sonata Software off the highs of the day, but still 5% higher. And Intellect Design saw this big spurt after it announced a partnership with Wipro, and it still cooled off from the highs of the day. Stocks that are doing well on the back of volumes today, and Concord Biotech is one of them, off the day's high, but still 5.5% higher on very strong volumes. Finolex, JM Financial and GSPL continues to build on the gains from earlier in the week. Another 5% added today to that tally. And lastly, some other stocks that are bucking the trend in today's session include VIP Industries, Whirlpool and PNB Housing Finance. The Whirlpool and PNB nearing at the day's high point. Back to you guys.
Thank you very much for that. Samit Chavan of Angel One is now with us for a technical check on the markets. Samit, are you sensing momentum? Your stock recommendations and Reliance Industries going into its AGM very quiet.
Hi, good afternoon. See, as far as Nifty is concerned, it has clocked new highs. But if you look at the broader market, it has been sulking a bit since last couple of days. Mid-cap index is, underperforming a bit. So more than Nifty, we would be keeping a close eye on Bank Nifty. In fact, because 51,500 has been acting as a very strong resistance. Until the time Bank Nifty does not surpass 51,500, we may not see convincing move in Nifty probably towards 25,200, 350, 400 odd levels. So Bank Nifty's performance, the contribution would be quite vital. So 51,500 is the level to watch out for. And as far as important support levels are concerned for Nifty, 25,000 followed by 24,800, we are seeing as a very strong support zone. Reliance Industries, if you see, in last 1.5 months, this particular stock has done nothing. It has been gyrating in a range wherein on the higher side 3050 is the level to watch out for, and on the low side, whenever the stock reaches 2,900, 2,920, it tends to find some sort of support around 28.
Okay, all right, Samit. Thanks very much for joining in and taking us through all of your strategies. We'll take a short break, but up next, we'll get you an exclusive conversation with Saugata Gupta, the MD and CEO of Marico. Stay tuned.
In terms of earning growth, we see a moderation in earning growth for this year, and maybe for next year, mid-teens kind of growth. But overall, we don't think market is an overbought position, and is a more or less fair valuation, we do say. So more and more FDI, more and more FI and trade partners will come in next 5-6 years. For next 5-6 years, we do see a good investment in industrial side, especially on power side, railways, defense. So it's a much broader and longer theme. And Chinese players and Korean players are not present in India as well as in US and Europe. So complete opportunity for India and export opportunities also for India is very, very high comparatively. For next 6 to 7 years, the overall power sector investment, including generation and transmission, could be around 50 lakh crore.
Welcome back. Well, we're now counting down to the 47th annual general meeting of Reliance Industries in a short while from now at 2 p.m. The street is keenly watching out for concrete plans for the Jio and retail IPOs. Updates on the new energy projects and Jio's 5G monetization will be other important updates that investors will wait for. But before that, here's a look back at the year that was.
Reliance Industries has marked a stable FY24. The flagship oil-to-chemicals business continues to generate revenue, and the new age businesses are starting to attain scale. The conglomerate has also hit a few crucial milestones along the way. Reliance became the first Indian company to cross 20 lakh crore rupees in market cap. In terms of consolidated revenues, it crossed another important milestone of 10 lakh crore rupees for the very first time. The oils to chemicals business continues to be the biggest contributor to revenues with almost $68 billion. But the newer businesses like retail and digital are growing faster and have achieved critical mass. Reliance Jio not only achieved the fastest rollout of 5G, but Jio is also the largest 5G operator outside of China with 130 million subscribers. Mukesh Ambani highlighted the role of Jio in aiding India's digital revolution.
With Jio 5G, we are renewing our promise to build a brighter and more inclusive digital future for every Indian.
Chairman Mukesh Ambani said Jio has turned India into a data-rich nation. The year has seen new launches like the broadband service Jio Air Fiber and the low-cost mobile phone Jio Bharat.
Jio Bharat is a gateway to digital independence for those who can't afford smartphones.
A completion of a bouquet of offerings as well as the first telecom hike in 2.5 years has lifted the growth prospects for Jio. Artificial intelligence is the next frontier.
Jio Platforms wants to lead the effort in developing India-specific artificial intelligence models and AI-powered solutions across domains, thereby delivering the benefit of artificial intelligence to Indian citizens, businesses, and government alike.
Retail remains the fastest growing business in the Reliance stable. The retail business has clocked a valuation of $100 billion in the last round of fundraise from the Qatar Investment Authority, which invested $1 billion for a 1% stake. With this, Reliance Retail has doubled its valuation in 3 years.
Reliance Retail is the only Indian retailer in the global top 100 and one of the fastest growing retailers in the world.
Reliance Retail is now delivering to 30% of the addressable population in India with a fast pace of store additions every year, now reaching almost 19,000 stores across the country. Stores have witnessed over 1 billion footfalls last fiscal and the registered customer base crossed 300 million. Reliance Retail is also amongst the largest employers in the country.
We will continue to play a pivotal role in creating employment opportunities for the aspirational Indian youth.
Reliance AGMs have been a star-studded affair in the last few years. BlackRock's Larry Fink gave a special message in 2023. Facebook's founder Mark Zuckerberg, Sundar Pichai, CEO of Google, and even Bill Gates have appeared before shareholders previously. Global business collaborations have been with top-notch companies like Google, Microsoft, Facebook, BP, BlackRock, among others. The global business community was also out in full force at the wedding celebrations of Mukesh and Neeta Ambani's younger son, Anant Ambani, with Radhika Merchant this year. A drop in global demand and the increased geopolitical uncertainties have impacted the oil-to-chemical sector worldwide, and so Reliance is ramping up its new energy bet.
Integration of energy storage, with wind and solar power generation is critical to provide grid-connected, round-the-clock electricity. We are well on our way to prove this integration at megawatt scale in the next few quarters at Jamnagar.
Growth point. Well, news is just breaking on Reliance Industries, which has got the stock price very excited. It's now moved up close to about 2%. I think the board is going to be considering a bonus issue. I think in the next few days.
It's on the 5th of September, which is going to be on the next Thursday, where they will be considering a 1:1 bonus issue. So that is going to be taking place next week. We'll probably hear more about that from them in the Reliance AGM as well. And if history is correct, I think, the statistics are correct. The last bonus issue that they did consider at 1:1 was in 2017. But the right person to probably, delve a little further into this is Prakash Diwan. He's joining in to discuss this. Prakash, well, it's big news ahead of the AGM. They're going to be considering a bonus issue next Thursday on the 5th of September. Your first thoughts?
No, as you rightly said, it's taken quite some time for this kind of a milestone to be attained. The kind of from a debt-laden balance sheet to being light on debt. Of course, there's still debt given the projects that are underway. To have that kind of a cash on the books, which you can kind of capitalize, I think it's an immensely profound journey. I think the investors will probably look at the benefit. Of course, it doesn't really create any additional value from the stock that you own at 3,000 bucks odd, but it kind of brings up the number of shares in circulation, and that's something which the stock probably will benefit from. So very, very promising from that corporate action perspective. But I'm sure the AGM has got much more than just, this is, of course, something which is not bound to steal away the thunder, but the AGM has much more promising stuff to come. So we look forward to that in just about a few 10 minutes or.
Last bonus was in September of 2017 when Reliance went bonus, and prior to that was November of 2009. So it looks like every 7-8 years the company comes out and does a bonus announcement, and 1:1. The stock went into its AGM with relatively low expectations. We know, Prakash, historically that the AGM has been the platform for big bang announcements, whether it's been the telecom venture, the investments in new energy, the succession plan. But this time, I think that buzz was a little lacking. You've got that cherry on the cake. As you said, this is unlikely to steal the thunder. We've got that 1:1 bonus announcement that's going to come on the 5th of September. But if you had to lay out your top 3 key expectations, realistically, that could come out, what would it be?
The biggest thing that will move Reliance as a business, as a company to the next level is going to be the new energy business. So I would be extremely clued on to what indications we get in terms of timeline, in terms of quantum of growth that could start getting built into the stock. That will add such a different level of revenue stream. It's going to change. It's no more a telecom company. It's no more just an oil to chemicals company. It's no more a retail giant. It's going to morph into something very different. So that's the first one. The second, realistically, is probably timelines or some indication of the demerger, possibly, or the listing of the retail business, because that's reaching global scale. It's already in the top 10 in terms of not just footfall, in terms of the square footage that it covers, the kind of sales that it has been notching. So I would be extremely listening. And the third, which probably is not what the market's talking about much, Jio Financial has almost spent a year now on the listed space. But in terms of a new business rolling out of that, what all could be the roadmap, what areas they would focus on, how it's going to kind of morph into a much bigger player. And given the way we've got financialization happen in India, I would be surprised if that also becomes an engine of growth for the company. So, that's something which is very interesting for us. And of course, then you have a host of other things in terms of telecom and, announcement on O2C and stuff like that. But these three, to my understanding, are worth looking at, or kind of will definitely be very exciting to hear. And then don't miss out on the Reliance Disney deal, which has just come in at the 11th hour of sorts. And that could kind of also throw a lot of importance and spotlight on the media business.
Well, yes, I think those are the two big news pieces. The Reliance Disney deal ahead of the AGM, which is just about to start in less than 10 minutes, as you can see, around less than 9 minutes now. And separately, the cherry on the cake, which is the bonus issue, which they will be considering on the 5th of September, which is next Thursday. I think this would be the 5th bonus issue that they will be considering since 1983, where in 1983 they did consider a bonus issue in the ratio of 3:5. 1997 it was 1:1. 2009 1:1. 2017 1:1. So it's after a gap of 7 years that they are going to be considering another bonus issue. But Gurmeet Chadda joins in to discuss this as well. Gurmeet, first your thoughts on all of these big news pieces which have come out, the Reliance Disney deal ahead of the AGM as well as the bonus issue now.
No, I think significant, especially, I've been making this point since, they went, on a spending spree during the wedding of Anant Ambani. I think obviously you have huge digital plans. They made quite a, I think Jamnagar was the buzzword to begin with. And later on there were, other events to follow. I think it creates a nice digital giant. I think this could be India's Netflix moment. You have 100 plus channels. And, a lot of optimization will happen on the sports inventory as well, because they have IPL rights, they have the ICC World Cup, they have EPL, there's Olympics. So it becomes a very formidable force there. And a lot of advertisement, revenues can also be optimized, on that. So I think looks a good, solid, but, as I said, this is more long drawn. From an immediate perspective, I think this bonus news is positive. The stock has been consolidating now in a certain range. I think, but the bigger thing a street would want to know is clear-cut, I think, IPO plans for Jio and retail. And I think that to me would be the next big trigger for a giant like Reliance, where, if they can clearly specify the timeline in terms of when they want to do the Jio and retail IPO and any monetization in the energy business, because they're doing a lot of capex there. Any monetization there, would really, make the street feel very positive and optimistic.
Gurmeet, the first time where the IPO word was brought up, value unlocking for the Jio and retail business, was in the AGM of 2019. And after that, every AGM, shareholders, investors tune in, hoping to get some clarity on the roadmap and timeline. But do you think this time both the businesses, Jio and the retail businesses, are ready either for an IPO or maybe just a spin-off? Do you think this is the AGM when we will get that clarity?
Yeah, I can't be 100% sure, but I think that's the expectation, right, in the market, that probably this time there will be a clear timeline. Also, if you see, they've been now reporting numbers differently for each business's standalone. So whenever the results come, it is Jio first, and then retail, and then you get the, so the business anyways are being now, the numbers are being reported now in quarterly earnings for a time to come, and they do this AGM, which has now actually become one of the, most keen corporate events to look up to. We have been more used to Berkshire AGMs all our investing career. So I think, yes, I think the expectations are there. I think it's a question of when. I don't think so whether they will do it or not. I think it's a question of when they are going to. In between, there were some rumors in the market that they will probably do it on the day of Dhirubhai's birthday. But that did not happen. So let's see. I mean, we are about to know in a few minutes from now.
Okay, all right. Well, we have Deven Choksi joining in on the phone line. Deven, you've been a Reliance watcher for many, many decades now, I would say. So give us your sense. What is the expectation? And this big announcement of this bonus issue, which they will be considering in the ratio of 1:1, just 10 minutes ahead of the AGM. That seems to be setting the precedent or the stage for it.
Yeah, I think it's a wonderful news to get. On a total shareholder funds of about close to 8 lakh crores as of March 24, I think you are converting that fund, out of which I think equity share capital is about 6,700 crores. So whatever the ratio it comes down to, 8-9%, I think is the amount of money that you are taking out of shareholders funds, and I think increasing the capital, giving the bonus. Excellent, I think, proposition. Largely due to the fact that I think on the operating side of the business, already the EBITDA base is around almost, I think, now 1,50,000 crores on per annum basis, and which is growing at a steady pace of growth of around 15% now. So certainly, I think whatever the additional shares which are getting issued to the bonus will have a direct implication as far as the business is concerned, because the business growth is being seen. And capitalization of this reserve and giving shares in the hands of investors I think it's a better time. Maybe it's an indication for also the demerger of the retail and the geo platform. That is what I think I can read in between the lines. But let's see, I think what exactly they have to announce in the AGM, if at all.
Devin, the current market price of Reliance Industries is about 3,070. Do you want to help with an SOTP breakup of the various businesses?
Yes, I think between the consumer-facing businesses of retail and geo platform, approximately, I think we are close to around 1,900 to 2,000 rupees stock price, I think, between these two businesses. Then the oil and gas exploration business and the O2C business, I think, where your refinery and petrochemical segment of the businesses, that constitutes somewhere around another 1,000 rupees, and balance, I think, is out of the other businesses. That is how broadly I remember these numbers. I think don't have immediately in front of me.
And within the digital consumer-facing businesses of geo and retail, which according to your estimates should be say about 2,000 rupees. What's the breakup?
Should be, I think, 1,100 rupees for the retail business and about 900 rupees for the geo platform.
Okay. All right. When it comes to the finance arm, in fact, Gurmeet, what are you expecting? Because that's listed. Prakash mentioned it that it's been listed for the past year odd. So give us a sense in terms of what is your expectation that we could hear something on that, Gurmeet?
I think they would probably lay out the roadmap for their asset management business, where they have done the tie-up with BlackRock. Of late there was news of they picking up decent real estate space in Mumbai, a large one. There'll be more news on the broking and the asset management business as well as the insurance business, and more updates in terms of what are the new lending types. So I think it basically will be incremental businesses and initiatives they are doing across various different business they plan to incubate in geofinance.
Okay, all right. And Prakash, what about you? More specifics in terms of what we could expect for Geo Financial Services? Like Gurmeet mentioned, the AMC, which is something which the street is looking forward to.
Yeah, so if you understand the chronology of the events, they've taken time to get into these tie-ups, which have very successfully been endorsed and cemented. Now it's time to kind of roll those things out and products and services to consumers. And the last development which I want to refer to here is the RBI permission to have 49% ownership in Geo Financial Services as well. Now, that's a big opportunity for them to be able to capitalize the company as and when it's required. Now, if there is a roadmap leading to that and the rollout of these businesses, then you actually have a behemoth which suddenly starts chugging along from day one. So that's what probably this AGM could lead us to in terms of anticipation.
Prakash, particularly for Reliance Jio, the telecom business, it appears to be now steady state in terms of operations. So, X of that big bank potential IPO announcement, value unlocking announcement, 5G is on track. The rollout is completed. They've got, I think, about 130 million subscribers now on the 5G network. The tariff hike has already been taken. Do you think we could hear anything on Reliance Jio, which could be market moving, or it will just be steady state? Prakash?
Oh, sorry, I didn't know it was for me. So yes, Rima, quickly I can tell you the Reliance Disney tie-up actually paves the way for a bundled offering on the FTTH, which has been a bit slow in that sense, and that could take off. I focus on that, and things could very differently start looking positive for Jio without all those demerger stories. So I would be very positive if that were to happen in terms of this opportunity that comes up with bundling those services and getting FTTH to be a very veritable and a very logical move for the companies to start offering to its consumer in a fairly significant way, which has not happened till now.
Okay. And Gurmeet, a quick word on new energy specifics that you'd want to watch out for?
Yeah, as I said,
I think we can cut across now. So Gurmeet, sorry.
Good
to
afternoon.
You for that. Yeah.
It is 2 p.m. and time to start the meeting. I welcome all of you to the 47th Annual General Meeting of the company. This meeting is held through video conferencing in compliance with the circulars issued by the regulators. the company has taken all feasible steps to ensure that shareholders are provided an opportunity to participate in the annual general meeting and vote. Adequate video conferencing facility and live webcast of the proceedings of these meetings have also been provided. Requisite quorum is present, and therefore I call the meeting to order. The register of directors and the key managerial personnel and their shareholding and the register of contracts or arrangements in which directors are interested are available and will remain accessible to members for inspection electronically if they so desire. I wish to introduce, for the benefit of new members, my colleagues on the board of our company. Shri R.S. Gujral, Dr. Shumit Banerjee, Srimati Arundhati Bhattacharya, His Excellency Yasir Al Rumayyan, Shri K.V. Chaudhary, Shri K.V. Kamath, Shri Haigriv Khaitan, Shri Nikhil Meswani, Shri Hital Meswani, Shri P.M.S. Prasad, Mrs. Isha Ambani Piramal, Shri Akash Ambani, Shri Anant Ambani. All directors of the company are present at this meeting. Shri V. Shrikant, Chief Financial Officer, Srimati Savitri Parekh, Company Secretary, and Shri K. Sethuraman, and the representatives of our statutory auditors and secretarial auditor of the company are also present at this meeting. Ladies and gentlemen, notice dated August 5th, 2024, convening this annual general meeting and a copy of the annual report for the financial year ended March 31, 2024 have already been circulated electronically to the members of the company. With your permission, I shall take them as read. The auditor's report on the standalone and consolidated financial statements and the secretarial audit report of the company for the financial year ended 31st March 2024 do not contain any qualification, reservation, adverse remark, or disclaimer. Accordingly, these reports are not required to be read out as provided in the Companies Act 2013. Now I will begin my formal address to the shareholders. My dear shareholders, good afternoon and a very warm welcome to the 47th Annual General Meeting of Reliance Industries Limited. At the outset, let us warmly congratulate our visionary Prime Minister, Shri Narendra Modi ji, for winning a third consecutive term. The 2024 parliamentary elections have produced a resounding victory for stability, continuity, and above all, for India's vibrant democracy. This has enhanced India's reputation globally, and it augurs well for the growth prospects of our economy. Friends, now I would like to share a few brief reflections on the global economy. The world of today brings both hope and concern. On one hand, we are living in the best of times with revolutionary breakthroughs in science and technology, especially in artificial intelligence, computing, robotics, and life sciences. They promise a future of unprecedented prosperity and well-being for all of humanity. The birth of AI, perhaps the most transformative event in the evolution of human race, has opened up opportunities to address a number of complex problems facing mankind. On the other hand, multiple geopolitical conflicts threaten global peace, stability, and even economies of nations. Also, it is no longer possible nor acceptable to ignore the stark developmental disparities amid rising aspirations for a better life in the global south. However, even in these uncertain times, there is one absolute certainty, and that certainty is the continued rise of New India as it marches confidently towards the goal of Viksit Bharat in Amrit Kal. Among its peers globally, India has unmatched demographics and relatively lighter debt burdens with fast growth. Today, India is one of the biggest growth engines and not just a carriage in the global economic train. The IMF forecasts that by 2027, India is set to emerge as the world's third largest economy, surpassing Japan and Germany. Achieving this proud milestone will be the best way to celebrate the 80th anniversary of our independence. Irrespective of the volatile times globally, India remains the brightest beacon of hope for the world. With its rich cultural heritage, empowered population, surging economic power, and age-old advocacy of peace, our nation will play a pivotal role in changing the world for the better. Friends, Reliance is truly blessed to make a humble contribution, but crucial contribution to creating a better India and a better world. All our businesses continue to be key drivers of the Indian economy. I personally believe that Reliance has become a success story because we have grown with a purpose. We are not in the business of pursuing short-term profit and hoarding wealth. We are in the business of creating wealth for India and enhancing the quality of life of every Indian every single day. We are in the business of providing highest quality products and services that improve efficiency, productivity, and ease of living for Indian consumers. We are on a mission to provide energy security to our nation. We are on a larger mission to make the world cleaner and greener for our future generations. We do all this because Reliance is driven by a purpose firmly rooted in our We Care philosophy. This philosophy of doing business with a broader and noble purpose is instilled in all of us by our founder chairman, Shri Dhirubhai Ambani. Esteemed shareholders, our founder firmly believed that you are the backbone of Reliance and that you deserve a substantial reward from time to time as your company grows from strength to strength. I have supreme confidence in the robust performance and the bright future growth prospects of all our businesses. Based on this confidence, I would like to share some good news with you today. At 1:45 p.m. today, Reliance Industries Limited has sent a notice to the stock exchanges that the Board of Directors will meet on the 5th September to consider issuing bonus shares in the ratio of 1:1. When Reliance grows, we reward our shareholders handsomely. And when our shareholders are rewarded handsomely, Reliance grows faster and creates more value. This virtuous cycle has been the guarantor of your company's perpetual progress. Dear shareholders, as I told you last year, Reliance has now become a net producer of technology. Breakthrough technologies and innovation have always been the greatest wealth creators for nations as well as for corporates. Reliance internalized this Vikas mantra at every stage of its growth. In recent years, this mantra is transforming Reliance into a deep tech company with advanced manufacturing capabilities in 3 seminal ways. First, we are embedding innovative technologies in every single business to generate ever greater value for our customers. Second, our talented engineers and scientists are incubating several critical technological innovations in-house to enhance our product and service offerings. Third, we have built an AI-native digital infrastructure for all Reliance businesses and have built our software stack, integrating end-to-end workflows and real-time dashboards. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards R&D, taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. I feel proud to inform you that last year, Reliance filed over 2,555 patents, mainly in the areas of bioenergy innovations, solar and other green energy sources, and high-value chemicals. Digital is another principal area of our in-house research. We have filed patents in 6G, 5G, AI large language models, AI deep learning, big data, devices, Internet of Things, and narrowband IoT. I assure you that this ongoing tech-driven transformation of Reliance will propel your company into a new orbit of hypergrowth and multiply its value for years to come. Our future is far brighter than our past. For example, Reliance took over 2 decades to be amongst the top 500 companies globally. In the following 2 decades, saw us joining the league of the world's top 50 most valuable companies. With our strategic adoption of deep tech and advanced manufacturing, I can clearly see Reliance earning a place in the top 30 league in the near future. Dear shareholders, let me begin by reporting to you the financial performance of Reliance for the year 23-24. Reliance Industries posted a record consolidated turnover of 10,122 crores in the financial year 24, becoming India's first company ever to cross the rupees 10 lakh crore mark in annual revenues. Reliance's EBITDA was rupees 1,78,677 crores, while the net profit was rupees 79,020 crores. Reliance's exports were rupees 2,99,832 crores, accounting for 8.2% of India's total merchandise export. Reliance invested cumulatively over 5.28 lakh crores in the last 3 years. Reliance remained the single largest contributor to the national exchequer, contributing 1,86,440 crores through various taxes and duty in the financial year 23-24. In the last 3 years, Reliance's contribution to the exchequer crossed rupees 5.5 lakh crores, the highest by any Indian corporate. Reliance also expanded its social impact with a 25% increase in its annual CSR spending to rupees 1,592 crores. With this, Reliance's total CSR spend for the last 3 years crossed rupees 4,000 crores, the largest among all Indian corporates. Reliance continues to be ranked as India's best employer by several external agencies. I am happy to state that Reliance continues to be amongst the largest employers in India. The nature of employment creation is changing globally, primarily due to technological interventions and flexible business models. Therefore, rather than just the traditional direct employment model, Reliance is embracing newer, incentive-based engagement models. This helps the employees earn better and instills the spirit of enterprise in them. That is why the direct employment numbers show a slight dip in the annual figures, although the total employment created by Reliance has gone up. We added over 1.7 lakh new jobs last year. If we include both the traditional and the newer engagement models of our employment, our head count today is nearly 6.5 lakh, Among all of Reliance's record achievements so far, this one will always hold a special place in my heart because employment creation for India's talented youth has to be our top national priority. Dear friends, last year, Reliance floated the financial services business as a separate listed company, which helped unlock significant value for our investors. Today, Jio Financial Services is worth nearly 2.2 lakh crores in market capitalization. I am sure that JFS will continue to create great value for society, for the nation, and in the process for shareholders as well. Let me now talk about our digital services business. Dear shareholders, in 2016, Jio began its mission to bring digital life to every Indian. And in 8 short years, Jio has transformed India into an inclusive, premier digital society. We have democratized digital services, making them accessible to every citizen and business across our nation. Thanks to Jio, India is now the world's largest data market. Today, Jio's network carries nearly 8% of global mobile traffic, surpassing even major global operators, including those in developed markets. And we have done this while maintaining the highest service quality, setting new benchmarks on the global stage. Jio's commitment to affordability has made its service accessible to all, with current data prices that are 1/4 of the global average and just 10% of those in developed countries. In 8 years, Jio has grown to become the world's largest mobile data company. Today, Jio is a 490 million strong family, reflecting the immense trust and loyalty of our customers. And each Jio customer, on an average, uses over 30 GB of data monthly, driving a 33% growth in our data traffic over the past year. We have also made significant strides in home services with nearly 30 million home customers across our digital broadband services and digital television services. This makes us one of the largest digital home service providers globally. And among business users, over 1 million small and medium businesses in India have embraced Jio. We are proud to be the trusted partner for over 80% of the top 5,000 large enterprises in the country. Each month, with every recharge and every bill payment, our customers cast their vote of confidence in Jio, reaffirming their trust in us. We are deeply grateful to our valued customers. Their confidence drives us every day to push boundaries and deliver the world's best digital services. Friends, one of the most gratifying aspects of Jio's journey is that everything we have achieved is powered by our own technology. From the start, we knew that leading the digital revolution required innovation, not just integration. Today, Jio stands as a true deep tech innovator. At the core of our success is our fully homegrown 5G stack developed by Jio's talented engineers. This end-to-end solution, tailored for India's unique needs, has proven itself on a national scale. Our operations support systems and business support systems are also fully homegrown. These platforms are the backbone of our network, ensuring top-tier service, quality, and efficiency. Jio's focus on innovation is also reflected in our growing portfolio of intellectual property. Jio is amongst India's largest patent holders with over 350 patents in 5G and 6G technologies alone. These patents are key to securing Jio's place at the forefront of global innovation. However, Jio's technological leadership isn't just about intellectual property. It is also about the people behind them, the dedication and expertise of nearly 18,000 Jio professionals. These professionals have mastered cutting-edge technologies, building, delivering, and operating industry-leading solutions Jio is known for. Jio's proven platforms, growing patents, and talented professionals position us to lead India's technological future. And we are doubling down on deep tech to further extend our competitive edge. Dear shareholders, last year, Jio reached a new milestone in both operating and financial performance. We welcomed over 43 million new subscribers to our broadband service. Our revenue surpassed the 100,000 crore mark, while our net profit exceeded rupees 20,000 crores. Our EBITDA margin reached 50.1%, boosted by customer growth and operating leverage. These remarkable achievements place Jio Platforms amongst the top 12 companies in India in terms of net profits, underscoring our financial strength and operational excellence. Friends, despite our scale, Jio still remains one of the fastest growing digital companies with immense opportunities for growth ahead. Let me start with 5G. This past year, we completed the pan-India rollout of Jio True 5G, the world's largest and fastest 5G deployment. Over 85% of the 5G radio cells operating in India belong to Jio. With the widest coverage and the highest quality, Jio True 5G now reaches every corner of India. Jio has transformed India from a 5G dark to a 5G bright, creating one of the world's most advanced 5G network. Through unmatched spectrum holdings, 5G standalone architecture, and advanced technologies like carrier aggregation and network slicing, Jio is the only operator in India and amongst the first globally to harness 5G's power. Jio True 5G has also achieved the world's fastest 5G adoption. In just 2 years, over 130 million customers have embraced Jio True 5G, and this is just the beginning. Today, nearly all smartphones over rupees 8,000 sold in India are 5G ready. As 5G phones become more affordable, 5G adoption on Jio's network will accelerate, further boosting data consumption. With Jio's lead in 5G coverage, capacity, and quality, we expect to capture the lion's share of the accelerating 5G adoption. As more users migrate to 5G, our 4G network's capacity is opening up uniquely, positioning Jio to welcome over 200 million 2G users in India into the Jio 4G family. Our Jio Bharat initiative, offering entry-level 4G phones at prices lower than 2G phones, reflects our commitment to a 2G Mukt India. For many 2G users, Jio Bharat is their first step into digital services. And today, nearly half of the 2G customers upgrading their devices choose Jio Bharat, demonstrating the unmatched value of Jio's offering. My dear shareholders, let us now discuss the incredible growth potential of our home broadband services. We launched Jio Air Fiber, our 5G-based home broadband service, last October. Jio Air Fiber offers high-speed broadband across India, fulfilling customer orders faster than possible with the optic fiber service. In just over 6 months, we acquired our first million Air Fiber customers. This milestone is remarkable and the fastest of its kind globally. But that was only the beginning. By leveraging our deep tech capabilities and continuously optimizing every process, we acquired the next 1 million air fiber customers in just 100 days. We are still streamlining our operations and see potential to accelerate even further. We are now challenging ourselves to add 1 million homes every 30 days. With this momentum, we are confident of reaching our target of 100 million home broadband customers at record speed. And we are also targeting over 20 million small and medium businesses, bringing them the connectivity to thrive in today's digital age. But what excites us the most is the potential to connect India's 1.5 million schools and colleges and over 70,000 hospitals and 1.2 million doctors. Imagine the possibilities when every school in India has high-speed internet, enabling digital classrooms, remote learning, and access to vast knowledge. Or consider connected hospitals where doctors consult global specialists in real time, access the latest research, and offer the best care. These institutions are our nation's backbone, and by connecting them, we are building a stronger, more resilient India. For the past few years, I have discussed the exciting deep tech frontier of artificial intelligence and its global potential to redefine industries, economies, and daily life. We made a bold promise to bring benefits of AI to every Indian, everywhere, just as we did with broadband. Today, I can affirm that we are on track to fulfill that promise. At Jio, we have always been at the forefront in leveraging cutting-edge technologies for faster scaling, higher efficiency, and superior customer service. And now, AI has become integral to everything we do. We have rapidly augmented our talent and capabilities, embracing the latest in generative AI. And we are embedding AI into all our processes and offerings, creating end-to-end workflows with real-time, data-driven insights and automation. This is helping us deliver smarter, more responsive services to both internal users and customers. To streamline AI adoption, Jio is developing a comprehensive suite of tools and platforms that span the entire AI lifecycle. We call this Jio Brain. Jio Brain enables us to accelerate AI adoption across Jio, driving faster decisions, more accurate predictions, and better understanding of customer needs. We are also starting to use Jio Brain to drive a similar transformation across other Reliance operating companies and to fast-track their AI journey as well. I anticipate that by perfecting Jio Brain within Reliance, we will create a powerful AI service platform that we can offer to other enterprises as well. Friends, while we are starting in our own backyard, I believe the true power of AI lies in making it accessible to everyone, everywhere. With Jio AI's everywhere for everyone vision, we are committed to democratizing AI, offering powerful AI models and services to everyone in India at the most affordable prices. To achieve this, we are laying the groundwork for a truly national AI infrastructure. We plan to establish gigawatt-scale AI-ready data centers in Jamnagar, powered entirely by Reliance's green energy, reflecting our commitment to sustainability and a greener future. As the only company with access to such green power, Reliance is uniquely positioned to lead this transformation. Also, we plan to create multiple AI inference facilities across our captive locations throughout the country, which will scale up to support the growing demand. In parallel, we will partner with leading global technology companies and innovators to bring the most advanced AI models, solutions, and tools to India. By leveraging our expertise in infrastructure, networking, operations, software, and data, and by collaborating with our global partners, our goal is to create the world's lowest AI inferencing cost right here in India. This will make AI applications in India more affordable than anywhere else, making AI accessible to all. For instance, in the retail sector, AI can help optimize inventory management, reduce waste, and ensure that the right products are always available at the right time. In healthcare, AI can assist doctors in diagnosing diseases more accurately and faster than ever before, potentially saving countless lives. In entertainment, AI can create personalized experience for users, making content more engaging and relevant. In agriculture, AI can analyze vast amount of data from various sources such as weather patterns, soil health, and crop growth, and provide farmers with actionable insights to increase farm productivity and income. Similarly, in education sector, AI can offer personalized learning experiences, help students learn at their own pace and in their own style, regardless of their location or background. These are the kinds of innovations that Jio's AI efforts are focused on, ensuring that the benefit of AI reach every corner of India and touch lives of every Indian. Let me focus on 4 sectors that will benefit the most from AI. 1. Agriculture. AI farmers will use intelligent tools to conserve water, manage other resources efficiently, make use of accurate weather predictions, and grow more innovative crops that satisfy both food and non-food needs for society. They will optimize crop yields, control pests, reduce waste, and enhance environmental sustainability. This will lead to unimaginable growth in farm productivity, new economic activities in rural areas, and attractive and abundant livelihoods, thereby ending the India-Bharat divide forever. 2. Education. AI teachers will personalize learning experiences, making high-quality education accessible and affordable to all. Every Indian student, including those living in remote corners of our country, will be able to learn more, learn better, and gain skills aligned to the needs of tomorrow's India and tomorrow's world. Imagine a future when 300 million Indian students are thus fully and comprehensively empowered by AI teachers. They will rapidly modernize India for sure. But India will also become the largest supplier of high-paying human resources to countries around the world, solving global problems both virtually and physically. This bright future can be realized within a single generation, setting the stage for a Viksit Bharat. 3. Healthcare. Sarve Santu Niramaya. May all be healthy has been India's prayer and aspiration since Vedic times. AI doctors will realize this age-old aspiration by making India a healthy, wealthy, and fit nation. Simple body-compute interfaces will become as commonplace as smartphones today. They will be affordable for all in the same way that Jio has made smartphones affordable even to common Indians. AI doctors will also be accessible to all and available everywhere 24/7. They will improve diagnosis and treatment, enable early detection of diseases, personalized treatment plans, and promote preventive and predictive cure, especially for children and senior citizens. In this way, AI will meaningfully prolong every Indian's disease-free lifespan. 4. Small businesses. AI Vyapar will enable merchants and small businesses achieve high levels of innovation and productivity. It will automate routine tasks, enhance decision-making with data-driven insights, and open new avenues for growth and competition. Using AI, even a small business owner operating in a Tier 3 city of India will be able to compete on a global scale. I am extremely confident that by harnessing the power of AI, India will leap into a future of unprecedented progress and prosperity. By embracing this technological revolution, we will unlock the full potential of our nation and transforming lives and creating a brighter tomorrow for every Indian. And more importantly, these AI models and services will be hosted within India's border. They will comply fully with Indian data and privacy regulations, ensuring the security and privacy of our citizens are always protected. To achieve AI leadership, we also need to invest in talent development. That is why Jio is partnering with Jio Institute to develop a cutting-edge AI program. This program is designed to cultivate the next generation of AI talent in India. By equipping young minds with skills for advanced AI, we are securing Jio's future and contributing to India's development as a global technology hub. At Jio, we believe that AI should not be a luxury reserved for a select few. AI services must be accessible on all devices, not just expensive, high-end devices. This requires a delivery model where AI services and the data processed by AI are both hosted in the cloud, allowing every user to access their data and AI services from anywhere on any device over low latency broadband networks. This is the only way to ensure that everyone, irrespective of their socio-economic background, will benefit from AI. We call this concept connected intelligence. As a first step to connected intelligence, every user needs ample and affordable data storage capacity in the cloud with the highest levels of privacy and security. With data safely stored in the cloud, AI can deliver intelligent, personalized services over the network. Today, to support our AI everywhere for everyone vision using connected intelligence, I am thrilled to announce the Jio AI Cloud Welcome Offer. Today, I am announcing that Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage. We plan to launch the Jio AI Cloud Welcome Offer starting Diwali of this year, bringing a powerful and affordable solution where cloud data storage and data-powered AI services are available to everyone, everywhere. With this, let me invite Akash and Kiran on stage to talk about some of the exciting developments at Jio.
Good afternoon, everyone. Today, we're excited to share the newest features in Jio Home, making your home more connected, convenient, and smarter than ever before. Jio has transformed digital home services in India over the past few years. Millions now enjoy ultra-fast internet, seamless video streaming, and top OTT applications powered by a Jio Home Broadband and Jio Set-Top Box. But at Jio, we believe in constantly pushing the boundaries of what's possible. Today, we're excited to unveil the next evolution in Jio Home offerings.
Indeed, Akash. Building on the success of our home broadband and Jio set-top box,
We are now exploring new horizons in home entertainment and smart living. Today, we are thrilled to introduce Jio TV OS, our 100% homegrown operating system for the Jio set-top box. Jio TV OS is made for your big TV screen, giving you a faster, smoother, and more personalized experience. It's just like having a custom-made entertainment system at home. Jio TV OS supports cutting-edge home entertainment features like ultra-high-definition 4K video, Dolby Vision, and Dolby Atmos. This means you get the best picture and sound quality, just like being in a movie theater, but in the comfort of your living room. And it's more than just a user interface. It's an entire ecosystem that brings together all your favorite apps, live television, and shows in one simple, easy-to-use system.
A few years ago, we introduced Hello Jio, the voice assistant that is now part of tvOS that lets you control your set-top box with your voice accessible using the mic button on the Jio remote. Hello Jio has quickly become one of the most loved features of Jio set-top box. Recently, we have made Hello Jio even smarter using the latest generative AI technologies, improving its natural language understanding and making it feel more human-like. Now, finding content on Jio set-top box is easier than ever. For example, just say Hello Jio, find action movies, and it will search across all your apps like Amazon Prime, Disney Plus Hotstar, and more. And will show you the best options in a single combined list. No more searching through each of your apps one by one to find what you want.
Hello Jio can also launch apps with commands like Open Netflix or find specific movies, shows, or music by name. Want to watch some sports? Just say, play Star Sports, and Hello Jio tunes in. No need to remember any channel numbers. Hello Jio can also control your Jio set-top box using voice. For example, you can say, Hello Jio, increase the volume, and it's done. With Hello Jio, it's like having a friend who knows exactly what you want to watch or listen to. Just ask and it's done.
What also sets tvOS apart is Jio App Store, a key feature of the Jio set-top box. A rapidly growing developer ecosystem is creating innovative apps designed specifically for Jio Home, enhancing every aspect of your lifestyle. Whether you want to stay active with motion-based fitness, explore new educational content with your kids, or shop directly from the TV, the Jio App Store has something for everyone in your family. Imagine practicing yoga with a real-time feedback from AI-powered virtual coach, or enjoying an augmented reality shopping experience that lets you try on clothes or makeup, all from the comfort of your couch. These are just a few examples of the smart apps our developer community has created for Jio set-top box. We extend our heartfelt thanks to our developer community for their continuous innovation and for enhancing the Indian home experience through their creativity and dedication.
And there's more. We're not stopping at entertainment and lifestyle. Homes worldwide are becoming smarter and more connected through the Internet of Things, or IoT. Picture this. Your air conditioner turns on when you enter the room, or your lights dim as you settle in to watch a movie, or you get a notification when an unauthorized person comes to your front door. All these things without you lifting a finger. We believe that IoT is the backbone of tomorrow's smart Indian homes, simplifying routines, enhancing security, saving energy, and much more. And with Jio Home IoT solutions, we can make your lights, air conditioners, security systems, and all other appliances work together to make your life easier and smarter. Jio Home IoT Solutions is fully integrated with Jio TV OS, making your home more intelligent and responsive to your needs. And with our Matter-compliant solutions, which is the latest industry standard, Jio Home IoT ensures that all your smart devices work seamlessly together and can be controlled from a single unified platform.
To unify these incredible features, we've developed the Jio Home app. The Jio Home app is your personal control center, letting you manage everything in your home, from your Wi-Fi to your smart devices with just a few taps. Because your security is our top priority, Jio Home app includes features like malware detection and guest Wi-Fi management, keeping your home network safe and secure.
These new features don't just make your home better. They turn it into a smart, seamless, and secure place where everything works just the way you want. From watching your favorite shows to managing your home security, everything is now easier and more connected with Jio. We can't wait for you to experience how these new Jio features will make your home smarter, more connected, more secure, and easier to live in.
Now, let's talk about Jio TV Plus and our vision for the future of digital entertainment. Jio TV Plus brings all your entertainment, live TV, on-demand shows, and apps together in one easy-to-use platform. With Jio TV Plus, you get access to over 860 live TV channels with all leading channels in stunning high definition, plus the best content from apps like Amazon Prime Video, Disney Plus Hotstar, all in one place. And we're optimized Jio TV Plus for super fast channel switching experience. Switching between your favorite channels is now faster than ever, so you won't miss a single moment of action.
What makes Jio TV Plus really unique is how it combines content from over a dozen OTT apps, hundreds of live TV channels, and a vast library of on-demand movies and shows, all with a single login. You no longer need to juggle multiple apps or remember different passwords. Jio TV Plus handles it all. Also, a powerful recommendation engine offers personalized suggestions based on your viewing habits, making it easier than ever to find something you will love. And if you miss a show, Catch Up TV lets you go back up to 7 days and catch up on what you missed. With our upcoming Play Pause feature, you will soon be able to pause live TV and pick up right where you left off whenever you are ready. It's all about making TV work for you.
But that's not all. We're elevating digital entertainment with advanced interactive features. Imagine watching a live cricket match or the Olympics and being able to pull up stats, buy tickets, or switch camera angles, all without leaving the action. That's the power of Jio TV Plus.
Jio TV Plus is also designed to be a truly social experience. With integrated social features, you can share what you're watching with friends, join live watch parties, or discuss your favorite shows in real time. This is the future of TV, and we are excited to bring it to your living rooms.
Now, let's talk about AI. Our chairman introduced the concept of connected intelligence, where AI services and data are seamlessly delivered from the cloud over ultra-fast broadband, accessible anytime, anywhere, on any device. Today, we're excited to talk about a new service that we are developing that makes using AI as easy as making a phone call. We call this service Jio Phone Call AI, which lets you use AI with every phone call. Jio Phone Call AI can record and store any call in Jio Cloud and automatically transcribe it, which means automatically convert it from voice to text. It can also summarize the call and even translate it into another language. This allows anyone to easily capture and access important voice conversations, making them searchable, shareable, and understandable across languages, all with just a few clicks. Let's dive into the experience to show you how simple it is. Imagine that you are an important phone call. Jio has given a separate dedicated phone number to Phone Call AI. Just add the Jio Phone Call AI's phone number to your call, just like you would another person. Once you hear the welcome message, press 1 to start recording and transcribing the call. Now you can begin your conversation.
In the background, Phone Call AI listens and turns everything you say into text, quickly and accurately. And Phone Call AI will periodically announce that the call is being recorded, so everything is clear and transparent to all the parties on the call.
At any point, you can pause the transcription by pressing number 2. For example, if you are discussing another topic, Phone Call AI will periodically announce the transcription is paused again for full transparency. Simple, right? And when you're ready to start again, just press number 1 or press number 3 to end when you're done. And that's how easy it is to use Jio Phone Call AI. It's hassle-free, no apps needed, just a simple, reliable phone number to record and transcribe your calls with precision. Whether you're in a one-on-one call or a group conference, or even just making personal notes, Jio Phone Call AI can be your go-to solution for seamless call recording and transcription. Another exciting aspect of Jio Phone Call AI is the inclusivity it brings to millions of our citizens who are hearing impaired. By converting spoken words into text, it ensures they can stay connected and not left out of any important discussions.
All your call recordings, transcriptions, summaries, and translations created by Jio Phone Call AI are safely stored in Jio Cloud, so you can access them anytime. And with our Jio Cloud welcome offer, Jio customers will get plenty of affordable storage with the highest privacy and security. Of course, Jio Cloud isn't just for storing phone calls and transcripts. It's a full-fledged cloud storage service where you can securely upload, store, and share everything from photos to videos to documents and any other digital content. By keeping your data in Jio Cloud, you are positioning yourself to fully leverage the power of connected intelligence, making your digital life smarter, more integrated, and more efficient.
Another example of connected intelligence is Jio Bharat, our ultra-affordable entry-level 4G phone. Even though Jio Bharat costs less than a 2G phone, it is packed with powerful digital services like UPI payments, video and audio streaming, and hundreds of live TV channels. This is possible because we offload much of the processing from the device to the cloud, delivering results seamlessly over our 4G network. These are just a few ways we're bringing advanced AI through connected intelligence to every Indian simply and effectively. We'll keep bringing you AI solutions that works hand in hand with our network and cloud, making life easier and better for everyone in India. And with that, let's invite our chairman back on stage.
Thank you, Akash and Kiran. Dear shareholders, with deep tech innovation and a focus on customer and shareholder value, Jio is poised to be a cornerstone of India's digital future. Led by our momentum in connectivity, we are targeting to double our revenues and EBITDA over the next 3 to 4 years. And beyond that, the potential of AI as a growth engine is enormous, and I will keep you updated on our progress in AI. As we look ahead, our every step in innovation and technology brings us closer to a future where Jio's success is measured not just by profits, but by the positive impact we have on hundreds of millions of Indians. Dear shareholders, today I am pleased to share with you the remarkable progress made by our media and entertainment business. It is transforming India's media landscape. Our media business achieved over 10,000 crores of revenue. This represents an industry-leading growth of 49%. Viacom18, our entertainment arm, did even better. Driven by sports segment, it saw a remarkable growth of 62%. Jio Cinema is revolutionizing digital sports and entertainment. In a short time, it has reached major milestones. The second season of IPL on Jio Cinema was a huge success. It reached 62 crore Indians. That's a 38% increase over the previous season. Total viewership grew by 50%. This made it the most watched live stream event in the world. This success continued during the Olympics. Jio Cinema's new subscription pack is a game changer. It offers OTT originals, reality shows, blockbuster movies, and top content from HBO, Paramount, and NBCU. In just 100 days, Jio Cinema crossed 15 million paying subscribers. This is the fastest growth in this category. Colors, our flagship Hindi channel, reached its highest market share in 12 years. It climbed to the #1 position last year. Dear friends, our news business is reaching new heights. This is due to our focus on high-quality journalism. We lead in both general and business news. We are the only network in India with global ambitions. News 18 was India's top TV network for election news. On June 4, the counting day, its reach was nearly 50% higher than the IPL final. CNBC TV18 had an 82% viewership share on the budget day. This is in line with its weekly performance. CNN News 18 often outperforms all other channels combined. It has been #1 for over 2 years. Money Control is transforming into an advanced fintech provider of data and analytics for users in India and beyond. It is unmatched in speed and accuracy. It has 70 million unique visitors. Our premium services, MC Pro, has now over 8.5 lakh paid subscribers. This makes it a top 10 subscription site globally and the largest in India. First Post is becoming a global news powerhouse. Its subscriber base has more than doubled in the last 12 months. In July, First Post recorded 127 million video views. This ranks it 6th among global peers. First Post is recruiting top talent to become the definitive global news destination from India. I believe it is time for India, as the world's most populous nation, to assert its voice and gain its rightful space in the influential global media. Dear shareholders, let's now talk about our partnership with Disney. This marks the beginning of a new era in India's entertainment industry. We are combining content creation with digital streaming. Our digital-first approach will deliver unparalleled content at affordable prices. We will cater to every consumer's taste. We will provide world-class digital entertainment across the spectrum. We are excited about this partnership. I warmly welcome Disney to the Reliance family. Just like Jio and retail, our expanded media business will be an invaluable growth center in the Reliance ecosystem. Dear shareholders, Reliance Retail continues to build on its position as the leader of Indian retail sector while achieving scale comparable to top retailers globally. I am happy to inform that Reliance Retail is now amongst the top 5 global retailers in terms of number of stores, amongst the top 10 retailers in terms of market capitalization, amongst the top 20 retailers in terms of number of employees, and amongst the top 30 retailers in terms of revenue. Our unique operating model has been the foundation of the competitive advantage and leadership position of our retail business. First, we have an unbeatable omni-channel model providing customers seamless experience across physical and online channels and convenience. We have a common inventory across channels that provides hyper-local delivery, leveraging our widest store network. We have built multiple channels to serve customers through about 19,000 owned stores and nearly 80 million square feet across 7,000 plus cities, 4 million Kirana partners, and a wide bouquet of digital platforms which provide us access to consumers across the country. We have built an extensive and efficient supply chain with over 32 million square feet warehouse network to support our pan-India operations. Second, we are a quality and design-led company and provide the highest quality products at competitive prices with several design labs and centers across the country in all our major segments. Third, we are using deep tech with real-time dashboards, integrated AI workflows to make our operations AI-enabled across the value chain. Fourth, we are building significant capacities in data analytics and personalization for best-in-class customer experience. Fifth, we are committed to sustainability in all our operations. We have implemented sustainable packaging, renewable energy, diversity, ethical sourcing, waste management, and supporting local communities in our business on a day-to-day basis. Sixth, our organization design and architecture with empowered teams and clear accountability are enabling our growth with discipline and driving scale and operating leverage. I am happy to inform you that our retail business is also promoting several important societal goals. We are enriching India's Kisans and MSMEs by procuring their quality produce. We are sourcing more from the tribal areas. We are promoting women entrepreneurs. Above all, retail business is generating more direct and indirect livelihood opportunities. Let me now invite Isha to provide us an update on retail's performance over the last year and its growth plans.
Thank you, Chairman. Allow me now to present the highlights of last year's performance. Reliance Retail recorded gross revenue of 3,06,848 crores, a growth of 17.8% over the last year. We continued our trajectory of strong profit growth, registering an EBITDA of 23,082 crores, up 28.4% year-on-year, and net profit of 11,101 crores, up 21% year-on-year. At 8.5%, the EBITDA margin continued to show improvements and grew 70 bips year-on-year. Our stores witnessed over 1 billion footfalls, and we have had more than 1.25 billion transactions across our channels. Registered customer base crossed a milestone of 300 million customers, nearly the population of the US. We opened 1,840 new stores this year, bringing our total store count to 18,836 stores, with a retail space of 79 million square feet in total. During the year, Reliance Retail undertook an equity fundraise of rupees 17,814 crores, achieving a valuation milestone of $100 billion. Let me now cover key highlights of our businesses. Dear shareholders, in grocery, we're not only the largest, but also one of the fastest growing retailers, expanding at 2.5 times the rate of the rest of modern trade. Our growth is driven by a focus on smaller towns, where over 2/3 of our new stores are opening. In many of these markets, we are the first modern retailer to establish a presence. At the same time, we're selectively expanding our premium formats, Fresh Signature and Fresh Pick, in large cities, continually innovating to enhance the consumer experience. Our impact extends beyond just retail. We work closely with thousands of small and medium vendors, regional brands, and new age startups, providing them a platform to grow and scale with the Indian consumers. This creates opportunities for small entrepreneurs to showcase their products and expand their reach. For example, Mukharochak Chanachur, a specialty from Kolkata, is now available in hundreds of stores outside of West Bengal. Lakshmi Narayan Chivra from Pune has co-created a highly successful misal mix exclusively for our Smart Bazaar stores. Brands like Yoga Bar, Soulful, Mama Earth, and Storia are finding success nationwide through our collaboration. As we continue to introduce new offerings and expand our reach, we believe this business will grow rapidly, enhancing both our market presence and profitability. Our online platform JioMart adds another layer of convenience, offering hyper-local delivery with a wide and relevant assortment. Every one of our stores is equipped to seamlessly handle digital orders. Our extensive network of smart points in over 1,300 cities gives us a significant competitive advantage in the e-commerce space. Milk Basket, our subscription service, makes it easy for households to receive daily deliveries of essential products at their preferred schedule. We're expanding this service to new geographies, leveraging our existing supply chain. With the acquisition of Metro India Cash and Carry, we have strengthened our omni-channel capabilities, offering a wider assortment for our Kirana and Horeca partners. We're delighted to have over 4 million registered Kirana partners in our new commerce business, supported by a footprint of over 220 metro stores across 200 cities. In our consumer brands business, we are focused on creating high-quality products at affordable prices to drive greater consumption across India. We have relaunched several popular brands like Campa, Lotus Chocolates, and Socio. The early success of all these brands give us confidence that we are on the right path. We have built a robust pan-India supply chain through our own facilities and strategic partnerships, allowing us to offer products at highly competitive prices. Our state-of-the-art R&D facility in Bangalore is key to this effort, enabling us to quickly develop world-class food products and bring them to market at great speeds. This has driven strong growth across our own channels and through general trade. We're also establishing 7-Eleven as a leading 24/7 convenience destination, offering localized fresh food and beverages tailored to the Indian palate. In fashion and lifestyle, our vertically integrated operations, from designing and fabric sourcing to logistics and distribution, allow us to set trends and meet the diverse fashion needs of our consumers across the country. We're the only fashion player in India with a significant presence in every segment of the income pyramid, from mass market to premium and luxury segments. Our investments in brands like Kalanikethan, Zivame, Clovia, Amante, and Urban Ladder have given us a strong foothold in these categories. Our own brands, Avasa, Netplay, and DNMX, each surpassed the 2,000 crore annual sales milestone last year, while John Players and Team Spirit crossed the 1,000 crore in sale milestone. To keep up with the growth, we have established 18 domestic and 3 international design centers, ensuring our designs are locally relevant. We have also developed an end-to-end digital platform that reduces the time from concept design to store shelf to just 30 days, ensuring that our stores are always stocked with the freshest merchandise. New formats like Ustand Swadesh offer fast, accessible fashion, while Agio continues to lead as an online fashion destination, with repeat customers contributing to 85% of sales. Agio Luxe is also solidifying its position as the top fashion destination for premium and luxury customers. Our partnerships with ASOS and Shein will bring trendy fashion products to the Indian market, keeping pace with global fashion trends. Turning to consumer electronics, we remain the market leader driven by a commitment to personalized customer experiences and offering tailored solutions. A key differentiator for us is the high-quality sales and after-sales service provided through our in-house service arm, Rescue. We have rapidly scaled our on-demand services for electronics across India and expanded our big box Reliance Digital format, alongside a new productivity-focused format for the latest mobiles and laptops. Our emerging businesses continue to show strong growth. In our jewels business, we're expanding our design capabilities to offer products tailored to specific occasions and regional tastes, launching both regional and national collections. We also have ambitious plans to enter the luxury jewelry segment with a curated design-led experience and are exploring the fashion jewelry and accessories segment to broaden our market reach. In beauty, we're building our presence through an omni-channel strategy across multiple formats like Tira, Sephora, Kiko Milano, and Blushlace. We're also enhancing our beauty and personal care offerings across our existing formats, grocery, fashion, and pharma, both online and offline. Our investment in Insight Cosmetics is enabling us to create our own brand portfolio. Just Dial continues to strengthen its position as the go-to platform for SMEs in India, now serving over 170 million quarterly users and more than 5 lakh paying merchants. To further accelerate our deep tech and AI native capabilities, we are investing in companies with proven expertise. Adverbs is a global leader in robotics, providing innovating warehouse automation solutions with intelligent robots, while Find specializes in retail tech solutions, enhancing customer experiences across multiple platforms. With the strong foundation we have built, I am confident that we will achieve our goal of doubling our retail business in the next 3 to 4 years. Thank you. I will now request our chairman to take over.
Thank you, Isha. Best wishes to you and your retail team for greater success in the coming years and the year ahead. My dear shareholders, Reliance's unwavering commitment to India's energy security has made our exploration and production business a cornerstone of success in the nation's energy sector. I'm proud to announce that our fields in the KG Basin have reached the peak output levels this year, a significant milestone that reflects the hard work and dedication of our E&P team in collaboration with our esteemed partners, BP. Congratulations to all involved in achieving this remarkable feat. As pioneers in deep water development and production in India, we have successfully commissioned 6 deep water fields, establishing ourselves as a world-class deep water operator. Despite facing numerous challenges, our team ensured the safe and timely commencement of the MJ field, a testament to our commitment and resilience. Currently, production from the KGD6 field is nearly 30 million cubic meters of gas and 22,000 barrels per day of condensate. Our fields now contribute to nearly 30% of India's domestic gas production, supplying a diverse range of customers across sectors such as fertilizer, power, city gas distribution, and various industries. This achievement marks a significant step towards realizing the national goal of increasing natural gas's share to 15% in India's energy mix by 2030. This year, we also celebrated a major financial milestone, surpassing 20,000 crores in EBITDA, with our revenues approaching the 25,000 crore mark. We remain committed to investing in safe and sustainable operations, resource expansion, and additional development wells to sustain and enhance our production capabilities. In line with our strategic vision, we acquired the KG UDW2 block under the OALP-8 licensing round and have planned exploratory wells in the KG Basin. In the coal bed methane or CBM sector, we have successfully drilled multilateral wells for the first time in India, boosting well productivity by nearly 4 times. This success is driving us to expand our well campaign across the rest of our CBM acreage. Looking ahead, we will leverage our E&P expertise to develop low-carbon energy solutions, including geothermal energy, underground coal gasification, natural hydrogen, and helium. These initiatives will ensure that Reliance continues to play a pivotal role in shaping a sustainable energy future for India. Dear friends, our fuel retailing joint venture with BP, GOBP, is setting new benchmarks in the industry, as highlighted in our recent You Deserve More campaign. We are proud to offer high-performance diesel that delivers 4.3% extra mileage per litre at no additional cost across our 1778 outlets nationwide. In addition, we launched the country's only truck driver loyalty program and now operate 105 convenience stores at our fuel stations, providing added value to our customers. GOBP has also more than doubled its market share in aviation turbine fuels, solidifying our position in this critical sector. Moreover, GOBP has rapidly grown to become India's leading fast and reliable charging company with over 4,800 charge points across the country. We are also proud to be India's largest retailer of high methane content compressed biogas, contributing to a more sustainable energy future. As we look ahead, we are fully committed to continuing our strong growth by consistently delivering the highest quality products and services to our customers. Dear shareholders, I now come to our largest growth engine, the oil to chemicals business. A few years ago, we undertook a strategic restructuring of our refining and chemical segment, merging them into an integrated oil to chemicals business. This pivotal move has significantly enhanced our operational excellence, fortified our supply chain, and ensured resilient financial performance in an industry highly vulnerable to its volatility and cyclical nature. Over the past year, we faced a complex global landscape characterized by geopolitical conflicts and weak economic growth in Western countries, leading to subdued demand. On the supply side, large-scale capacity additions, particularly in China, created a surplus, causing significant fluctuations in fuel and downstream chemical margins, with some dropping to multi-year lows. Despite these challenges, I am pleased to report that Reliance navigated through the headwinds to deliver industry-leading performance. The O2C business achieved revenues of 5,64,749 crores and an EBITDA of rupees 62,393 crores last year. This robust performance was made possible through several key actions. Let me highlight a few. First, we maintained a sharp focus on operational excellence. Our manufacturing assets operated at their maximum capacity, with our gasification units contributing significantly through stable operations and higher throughput. Second, we made sustained efforts to source advantageous feedstock from diverse and complex geographies in a challenging environment. Our diversification efforts led to processing 60 grades of crude oil, including 30 new crude oil grades. Third, freight markets skyrocketed due to geopolitical factors, with vessels coming under missile attacks in the Red Sea. We acted swiftly to control our freight costs, chartering more vessels on a long-term basis. Fourth, strong domestic demand for fuels and downstream chemicals helped improve product placement in the domestic market. Fifth, we continued to build our deep tech and advanced manufacturing competencies. We are pioneers in using AI-powered real-time optimization across our supply chain and advanced crude oil and feedstock characterization, all of which drive increased profitability. In the area of polymers, we produced new grades for plastic fuel tanks, making them safer and lighter, leading to lower fuel consumption in vehicles. In chemicals, we commissioned a new column to enhance our capacity of ethylene oxide by 45,000 tons per annum, increasing our capacity by 15% and increasing profitability. In polyester, we integrated polyester capacities through strategic acquisition, making us among the top spinners in the country and completing the only missing element in our textiles value chain. Reliance is now the largest producer of specialty fibers in India, with applications in mobility, home furnishing, and industrial uses. Friends, India's consumption of petrochemicals and polyester is expected to exhibit healthy growth across sectors such as consumer goods, infrastructure, automotive packaging, and agriculture, driven by the rapid expansion of our domestic manufacturing base. To meet this growing demand, we are adding capacities across both existing and new chemical value chains. Our new integrated facilities in the vinyl value chain will add 1.5 million tons per annum of PVC and CPVC at Dahej and Nagotne by the year 26-27. We are also adding 1 million tons of specialty polyester capacity by the year 26-27, which will be further integrated backwards with a 3 million ton PTA capacity by 2027. As demand for traditional polymers continues to grow, India will also require new and versatile materials. Reliance is building India's first world-class integrated carbon fiber plant at Hazira, which will rank among the top 3 units globally. We continue to expand our portfolio of composites of carbon fiber for use in the infrastructure sector. In addition to expanding capacities and developing new materials, we remain focused on enhancing our global feedstock sourcing and improving our supply chain. We are adding 3 more very large ethane carriers to our existing fleet of 6 ethane carriers used for sourcing ethane from North America. Dear shareholders, sustainability continues to be a key element in our O2C business. We are accelerating the use of renewable energy and are well on our way to becoming one of the largest users of renewable energy in India. Additionally, Reliance is making significant progress on various sustainability initiatives, including PET recycling, chemical recycling of plastics to produce pyrolysis oil, polyolefin recycling, conversion of hazardous waste into alternative fuels and raw materials, and the development of zero waste. Reliance already recycles over 2 billion PET bottles in India and is on track to reach a capacity of 5 billion bottles per annum by next year. In summary, I would like to reiterate that our oil-to-chemical business continues to be a robust growth engine, steadily enhancing its financial performance for a long time to come. We are actively investing in new capacities and capabilities to meet the demand growth in India. Dear shareholders, let me update you on the progress we made in our new energy business, our newest and most ambitious engine for growth and value creation at Reliance. This is a business with a special purpose, driven by our deep commitment to the philosophy of we care for our Mother Earth. Two mega concerns compelled us to embark upon this journey. First, the planetary imperative to mitigate the climate crisis. Second, India's own imperative to become a self-reliant green economy powered by green energy. Last year, I explained how India is confronted with a pressing energy trilemma: the availability of affordable, sustainable, and self-sufficient energy. This energy trilemma will become more acute as India's economy becomes larger and grows faster. In 2023, India generated nearly 1,600 billion units of electricity. To meet India's growth projections, this number needs to double in the next 10 years. Obviously, green and clean energy will need to provide the lion's share of this growth. My dear shareholders, last year at our AGM, I shared our work in bioenergy. I explained how your company is embracing societal challenges, delivering a unique solution to India's problem of nearly 230 million tons of non-cattle feed biomass, a significant contributor to air pollution. Starting from just 2 demo units a couple of years ago, we are now rapidly expanding our investments in bioenergy to reach 55 operating compressed biogas plants by 2025. These 55 integrated CBG plants will increase the incomes of our farmers by converting annadatas to urjadatas, food producers to energy producers. They will also generate over 30,000 direct and indirect jobs in rural areas, creating a model of all-around prosperity of the rural economy. Additionally, we have initiated an energy plantation pilot on 1,000 acres of arid wasteland to establish a first-of-its-kind integrated CBG plant. This initiative will create a self-sustaining ecosystem by transforming India's large wastelands into productive lands through the cultivation of energy crops. Spearheaded by a dynamic team of technologists and agro-scientists, we are also establishing the world's largest bioenergy deep tech R&D center at Jamnagar, focusing on, first, process improvements through customized biocatalyst and microbial consortia. Second, developing high-yield, drought-resistant variants for energy crops. Third, automating bioenergy plant operations and supply chain from farm to the plant. And fourth, integrating energy needs of the plant through photo-agro-voltaic solar technology for sustainable electricity supply. Together, these efforts represent our commitment to leading the way in the bioenergy revolution and creating a sustainable future for India and beyond. Dear friends, I'm delighted to announce that by the end of this year, we will commence the production of our own solar photovoltaic modules. In the following quarters, we will complete the first phase of our integrated solar production facilities. These include modules, cells, glass, wafer, ingot, and polysilicon with an initial annual capacity of 10 gigawatts. Our gigafactory is designed for modular expansion at minimal cost and in the shortest possible time. We have fully integrated and indigenized the HJT technology from REC Singapore, our wholly owned subsidiary, to develop first-gen bifacial solar panels with cell efficiency exceeding 26%. Additionally, we have significantly enhanced our R&D capabilities by establishing a state-of-the-art prototyping, testing, and validation lab in India, and we are expanding our advanced solar technology lab in Singapore. These advancements will provide a clear path to upgrade our Gen 1 products through cost reductions and optimization of supply chain, as well as efficiency improvements. This will allow us to develop disruptive technologies like perovskites and back contact HJT IBC, which we have already demonstrated at pilot scales with plans to commercialize them within the next 2 years. This innovation has the potential to fundamentally transform the solar PV industry. Our next generation modules will offer even greater efficiency, deliver more power from the same sized modules at a lower life cycle cost. Dear shareholders, to harness low-cost solar energy and make it available round the clock, we need energy storage solutions using stationary batteries. We have already begun construction of an integrated advanced chemistry-based battery manufacturing facility with a 30 gigawatt-hour annual capacity at Jamnagar. Production will commence by the second half of next year. We will start by assembling battery energy storage systems for utility-scale applications and pack solutions for residential, commercial, industrial, telecom, and mobility markets. Progressively, over the next few quarters, we will integrate backwards to cell manufacturing and eventually to battery chemicals production. This will create the world's only fully integrated battery gigafactory, driving synergies across the value chain. Our gigafactory will be smart from the start and fully digitally native. We will have full track and trace capability from battery materials to cells to systems, packs installed in the field. These production lines will be future-proof and adaptable to different chemistries and changing cell form factors. The modular design will allow us to rapidly expand annual capacity in multiples of 30 gigawatt hours, responding to both domestic and global demand while meeting diverse requirements from stationary to mobility applications. We have built deep strengths in electrochemical and product innovations, with access to talent, including from our subsidiaries Lithium Work and Ferradium. We have a strong team of nearly 150 technologists committed to deliver next-generation batteries and storage solutions that focus on safety, stability, and reduced life cycle costs. My dear shareholders, our deep understanding of electrochemistry, combined with our ability to industrialize at scale and integrate with low-cost solar energy, gives us a unique advantage in delivering green hydrogen and green fuels at the most economical cost. To achieve this, we have begun work on establishing a fully automated, multi-gigawatt electrolyzer manufacturing facility on the west coast of India, which will be ready by 2026. This gigafactory will be fully adaptable, capable of supporting various technologies such as alkaline, PEM, and AEM. The facility is built using Industry 4.0 standards and will be expandable in a modular fashion to meet market demand. In parallel, we are building capabilities for futuristic electrolysis-based technologies to tackle challenges in energy efficiency and capital cost reduction for our next-gen electrolyzers. Dear shareholders, Reliance's vision and mission is to make India a global leader in green and clean energy, which is indeed mankind's energy future. We are well on our way to converting our vision into reality within the timelines we had set. This is a testament to our unparalleled project execution capabilities and relentless efforts of our team. Jamnagar is the energy capital of the world. I am proud to say that by 2025, Jamnagar will also become the cradle of our new energy business. The Dhirubhai Ambani Green Energy Giga Manufacturing Complex will be the world's largest, most modern, modular and integrated ecosystem at a single location. We are on track to fully commit and invest up to rupees 75,000 crores to establish this manufacturing ecosystem extensively enabled by all emerging technologies, including AI, IoT, machine learning, and robotics. Our complete ownership and automation of the integrated value chain will allow us to maximize margins that are higher than those of standalone, non-integrated players. To support our investments, we are committed to partnering with leading global technology companies, building world-class, state-of-the-art R&D capabilities, and expanding our large dynamic talent pool of PhDs, technologists, and engineers from various nationalities. This will ensure that our company emerges as a deep tech, new energy leader with advanced manufacturing capabilities. This will keep us at the forefront of innovation and help us continuously introduce higher efficiency, reduce life cycle costs, and next-gen products. Friends, earlier I shared with you my vision to maximize the harnessing of photons, convert them into low-cost electrons, and add value by creating green molecules through electrolysis. I am pleased to report that we are well on our way to realizing this vision. We have leased arid wasteland in Kutch, just 250 kilometers from Jamnagar. This wasteland has the potential to generate about 150 billion units of electricity in the next 10 years, providing nearly 10% of India's energy requirements today. We have already begun significant project development work and are building our own transmission infrastructure to bring online solar generation projects that will deliver stable, renewable energy on a round-the-clock basis at gigawatt scale in a phased manner commencing 2026. Our proven engineering and construction capabilities, combined with the utilization of AI and data-driven approaches for configuration, design, project execution, and operations, will enable us to deliver the most affordable and stable RE-RTC power in the shortest time. In addition, we have secured access to nearly 2,000 acres of land at the Kandla port, which complements our existing marine infrastructure at Jamnagar. This integrated coastal infrastructure will provide us with an unparalleled competitive advantage for production, storage, evacuation, and shipping of green fuels to various markets in India and across the globe, ensuring we fetch the highest value for our green fuel molecules. My dear shareholders, with this robust ecosystem, we will accelerate the development of renewable energy round-the-clock power and green fuels projects in a modular and phased manner. The prospects of perpetual growth and profitability of our new energy businesses are assured by 5 factors. First, our focus will be on meeting our large captive RERTC requirements across our group businesses over the next 5 to 7 years, drastically saving their energy cost. These projects will be backed by firm offtake contracts and will generate positive cash flow for our existing businesses. Second, our investment in green fuels project will be supported by value-accretive offtake agreements with large global counterparts. Third, with short gestation periods from conceptualization to commissioning and cash flow generation, we will ensure with razor-sharp focus that these projects are cash flow positive from day one. Fourth, as we expand our next-gen products developed through our deep tech R&D, will deliver higher efficiency and reduce costs, leading to further margin expansion. Fifth, these businesses are being built with a mindset of startup growth companies with empowered task force teams with best-in-class global talent. Your company has a strong balance sheet, robust annual accruals, and access to the most competitive global institutional capital to responsibly invest in and support our new energy commitments. We believe that our new energy business will be truly unique, delivering cash flows that are less cyclical and more predictable. I am therefore confident that in the next 5 to 7 years, our new energy growth engine can aim to deliver an earning capacity like what our existing O2C business earns and what it has achieved over the last 4 decades. Reliance Foundation has been at the very core of our commitment to our We Care philosophy. Let me now invite Neeta to provide an overview of the outstanding work done by Reliance Foundation.
Thank you, Mukesh. Esteemed shareholders and my dear Reliance family, Namaskar. I hope each one of you and your families are doing well. As always, it's a joy and privilege to stand before you and reflect on the incredible journey that we have undertaken together. This journey is fueled by a shared commitment to growth, to innovation, and most importantly, to uplifting the lives of millions across our nation. We have continued to make progress on all our programs, and today I would like to highlight a few key focus areas of our work at Reliance Foundation. Before I begin, let's congratulate the Indian athletes who represented our country at the Paris Olympics 2024. Beyond records and medals, I'm moved by the stories of resilience, dedication, and hard work. They embody the indomitable spirit of India, a spirit that rises against all odds and refuses to give up. As corporates, as citizens, and as parents, we all must play our part in safeguarding, encouraging, and empowering this young spirit of India. That is our collective responsibility towards nation building. Greatness in any field is not achieved overnight. It is earned and built one day at a time. Let me begin with our mission in sport. It is our stated goal to make India a truly global sporting powerhouse. In pursuit of this goal, our focus has been to build a robust sporting ecosystem that supports our athletes right from grassroots to glory at the highest levels. It is imperative that we start training our children young. We need a movement to ensure that every child in our country has the right to sport along with the right to education. Led by my son Akash, our Education and Sports for All program has so far reached out to nearly 23 million youngsters across multiple sports all over India. Through our various initiatives like Reliance Foundation Youth Sports and Young Champs, we are scouting and nurturing girls and boys from a young age to compete at school, college and district level competitions in all sports. At our high performance centers in Maharashtra, Odisha and Bengaluru, we run an in-depth training program for athletes that includes providing world-class infrastructure and training, as well as sports science and medicine support. Last year, we made significant strides towards realizing our shared dream of bringing the Olympics to India. In October 2023, we successfully hosted the 141st IOC session in Mumbai, marking the return of the Olympic movement to India after a gap of 40 years. At that historic session, our Honorable Prime Minister, Shri Narendra Bhai Modi ji, declared India's ambition to host the 2030 Youth Olympics and the 2036 Summer Olympics. Also, in a landmark decision at that session, cricket was included as an Olympic sport for the 2028 Summer Games in Los Angeles. As a member of the International Olympic Committee, I'm humbled to say that we have taken our first step towards fulfilling India's Olympic aspirations. We are committed to working with like-minded organizations to support the Prime Minister's vision and realize this shared dream of 1.4 billion Indians. Through our work with the International Olympic Committee's Let's Move campaign and the Olympic Values Education Program, we work round the year to spread Olympic values and ideals, aiming to reach lakhs of children and thousands of teachers in the coming year. At the Paris Olympics this year, Reliance Foundation, in partnership with the Indian Olympic Association, hosted the first ever India House at the Olympics. India House became a space where we honored our athletes, celebrated our culture, and welcomed the world to India, a home away from home for our athletes and diaspora. It was a showcase of India's art and heritage, tradition and technology, talent and aspiration. Over 16 memorable days, India House welcomed more than 40,000 visitors, almost half of them being international guests. A France television journalist went on to report that if country houses were a category, India House would win a gold. India House is a humble beginning, a small step towards establishing India's firm and formidable presence on the Olympic stage. With the government, private sector, and all citizens backing the unwavering spirit and ability of our youth, nothing can stop India from becoming a truly global sporting powerhouse in the near future. Dear shareholders, education and sport go hand in hand in shaping the future of a nation. I'm a teacher at heart, and working with children has been one of the most enriching experiences of my life. I'm touched and delighted to see my daughter Isha follow that path and find her purpose in the field of education. She is redefining the education landscape in India. This year, she has launched 2 new path-breaking institutions for primary and early years education, Neeta Mukesh Ambani Junior School and Neeta Mukesh Ambani Early Years Campus. Truly envisioned as institutions of the future, these schools foster 21st century skills with a focus on pace-based learning, where every young learner thrives at their own pace and in their own ways. New Age teaching is about preparing our children for a world that we cannot fully fathom or imagine as yet. And therefore, the focus is on building resilience, collaboration, communication, creativity, compassion, and curiosity. Our vision is to set up international schools with an Indian heart and soul. To make this vision a reality, Reliance Foundation is proud to introduce our flagship teacher training initiative with our soon-to-be-launched School Leadership and Administration program. Beyond our schools, I'm happy to share that through Reliance Foundation, we aim to provide world-class early childhood care and education for over 10 million children from disadvantaged communities across India. This program aims to build capacity development models and provide learning resources for students and teachers all over India. Our efforts go beyond academic learning to promote complete development, including social emotional skills, critical thinking, and physical well-being. As part of our work with the Integrated Child Development Services, Reliance Foundation developed and refurbished 100 Anganwadis in Varanasi last year. Reliance Foundation is also a proud founding member of LIFTED, a multi-partner consortium that aims to strengthen foundational learning for 4 million children in India through a development impact bond and an EdTech accelerator. It is a first-of-its-kind initiative aligned with the government's Nipun Bharat mission that aims to achieve foundational literacy and numeracy for every child in India's primary schools by 2025. We have also partnered with the National Skill Development Corporation to create 100 future-ready courses like cybersecurity, AI, and sustainability, aiming to reach 5 lakh youngsters. Last year, we had announced our commitment to support 50,000 students through the Reliance Foundation undergraduate and postgraduate scholarships over the next 10 years. I am pleased to share that we have already awarded over 10,000 of these scholarships so far. In partnership with Jio, using the power of AI, we plan to work with state governments to digitally extend access and opportunities for students in 2 million schools of India. Mukesh and I are on a mission to enable quality education in our lifetime for 250 million school-going children of our country. India today has the largest number of young people in the world, with over 50% of our population under the age of 30. We are committed to empowering this generation to become the driving force of a new, resurgent, and unstoppable India, a truly Viksit Bharat. दोस्तों, विकसित भारत का सपना तभी सच होगा जब हम अपने इतिहास को संजोएंगे, वर्तमान को समृद्ध करेंगे और भविष्य को सक्षम बनाएंगे। हमारे देश की महानता का एक अहम हिस्सा है हमारी कला, संस्कृति और परंपराएं। अब समय आ गया है कि भारतीय विरासत की रोशनी पूरी दुनिया को प्रकाशित करे। With immense joy and pride, I would now like to talk about an initiative very close to my heart, Swadesh. Swadesh is our tribute to India's diverse cultural heritage and rich artistic legacy, a collective effort to preserve and promote our country's age-old arts and crafts. It all began as an exhibition at the launch of our Neeta Mukesh Ambani Cultural Center last year and has now become a movement for cultural renaissance. Swadesh highlights the spirit of Make in India and offers respect, sustenance, and global recognition to our skilled artisans. India is home to over 4,000 traditional arts and handicrafts and more than 70 lakh craftspeople. They are truly the pride of our country. And yet, unfortunately, due to lack of support, opportunities, and livelihoods. Many of them were giving up their proud legacy and lineage. That's how Swadesh was envisioned, to give our talented artisans a platform to showcase their skill and craftsmanship to a growing audience, both Indian and international. Apart from setting up stores in India, we now plan to take Swadesh global with the presence in the US and Europe as well. From Kashmir to Kanyakumari and from Sikkim to Bhuj, the work and voices of our artists and artisans will now be seen and heard not just in India but around the world. Dear shareholders, beyond art and culture, through our rural transformation initiatives, we have so far touched the lives of over 20 million people by building climate resilience, water conservation, enhanced livelihood, increased productivity, and various skilling programs. Another important area of our work is in disaster management. For us, helping people in times of calamities and distress is our prime duty. Whether it was the floods in Gujarat, Kerala, and Uttarakhand, or the COVID pandemic, Reliance Foundation teams have always been at the forefront, offering support and assistance to our fellow citizens in those hours of need. Recently, after the tragic landslides in Wayanad, volunteers of Reliance Foundation rushed to provide relief and rehabilitation. Our teams on the ground are supporting immediate response and recovery, as well as long-term requirements for the people of the district, such as providing food, water, and essential amenities, providing sanitation and hygiene, providing training for sustainable livelihoods, providing support for education, ensuring reliable digital connectivity through Reliance Jio, and enabling psychosocial support and community healing by trained counselors, especially for children and youth as they slowly rebuild their lives. Ladies and gentlemen, this year, our Sir H.N. Reliance Foundation Hospital completes 10 years. Over the past decade, we have been guided by a philosophy of respect for life. For us, every life is precious. I am especially moved by our hospital's advanced care for children. Out of the 10 lakh patients whose lives we touched last year, 10,000 were children. Our hospital carried out more than 550 complex pediatric surgeries of neonates and infants, not just from Mumbai, but all over the country. As we look ahead, we are committed to building additional capacity and using innovation, AI, and world-class medical professionals to provide affordable and top-quality healthcare to every Indian. Friends, another program that I'm especially proud of this year is spearheaded by my youngest son, Anant. From the time he was a little boy, Anant has shown us how to be gentler and more compassionate as humans. Our sacred Vedas teach us to serve not only humanity, but also all forms of life on our beautiful planet. Sarve bhavantu sukhinaha, sarve santu niramaya. May all beings be happy. May all beings be free from disease. Guided by this wisdom and under Anant's enthusiastic and dedicated leadership, we established Vantara, a sanctuary of hope and healing for every being. Located in Jamnagar, Vantara is a zoological research, rescue, and rehabilitation center for abused, neglected, exploited, and endangered animals, not only from India, but all over the world. Spanning over 3,500 acres, Vantara is home to more than 2,000 species and has impacted the lives of 1 million animals and birds. Vantara also runs Asia's largest wildlife animal hospital with the state-of-the-art equipment and more than 50 custom-made animal ambulances and extensive medical facilities. Our conservation and rehabilitation efforts also focus on protecting critically endangered species and restoring rare and vital habitats. Jamnagar is the Janmabhoomi of Anand's grandmother, Srimati Kokilaben Ambani, and Karmabhoomi of his grandfather, Shri Dhirubhai Ambani. Mukesh and I are very proud to see Anand make Jamnagar his Seva Bhoomi. Dear shareholders, this year, with the grace of our Devis and Devtas, Anand has embarked on a lifelong journey of togetherness with his soulmate Radhika. With open arms and hearts full of love, we welcome Radhika into our Reliance family. We are deeply grateful for the blessings and good wishes that each one of you have showered on Anand and Radhika for their wedding. आपकी दुआओं ने अनंत और राधिका के विवाहित जीवन को और भी सुंदर और मंगलमय बना दिया है। आपके आशीर्वाद और शुभकामनाओं के लिए दिल से धन्यवाद। On that note, ladies and gentlemen, as I conclude, my heart is filled with immense gratitude and deep responsibility. Your constant support and your unwavering faith in Reliance have been our guiding light. On behalf of Mukesh and me, our children, and the entire Reliance Parivar, I want to personally thank each one of you for being an integral part of this extraordinary journey. Through the various initiatives of Reliance Foundation, we have been blessed to touch the lives of over 77 million people across all states and 56,000 villages in India. As we march ahead, we are guided by the legacy of our founder chairman, Shri Dhirubhai Ambani, to serve with compassion, friendship, and humility. Together, let's build an India that stands tall, not just in the strength of its economy, but in the richness of its culture, the kindness of its people, and the depth of its humanity. As we enter the 15th year of Reliance Foundation, our resolve becomes deeper and stronger to create even greater impact and help uplift millions of Indians towards a brighter, safer, greener, more equitable, compassionate, and prosperous future. Thank you once again. Dhanyavad. Now, may I request our chairman, my husband Mukesh, to address all of us.
Thank you, Neeta. My heartiest congratulations to you and the entire foundation team for the phenomenal work you are doing in making our We Care philosophy come alive across the country. Today, I would like to assure you and Isha that I am here to join your team. I am here to devote more of my time and energy for the activities of Reliance Foundation, which are also very close to my heart. I am specially committed to empowering India's 300 million children with good education and good health care and ensuring a bright future for them. For Neeta and me, they too are our own children. Let us therefore prepare a more inspiring vision, a more ambitious plan for the next 10 years. So that when Reliance Foundation celebrates its silver jubilee, we will have enhanced a transformative impact on society 100-fold. Let us collaborate even more closely with like-minded organizations to build a strong philanthropic movement in India. Dear friends, today it gives me great pleasure to share with you an overview of Reliance's value creation roadmap for the coming year and beyond. Following in the footsteps of my father, Shri Dhirubhai Ambani, I have always believed that for Reliance, wealth creation for India and value creation for all our stakeholders are two sides of the same coin. When India's economy grows faster and stronger, which it surely will, it creates more opportunities for Reliance to grow all its businesses and create value exponentially. And when Reliance grows exponentially, which it certainly will, it will contribute more to India's inclusive prosperity. Our resolve to make Bharat prosperous and transform the life of every Bharatiya has led us to take bold business risks at the beginning of every investment cycle. We have built each of our businesses from scratch and grown them to global scale. We did not receive them as a largesse. We have often ventured beyond our comfort zone and explored uncharted territories. We helped create markets that others failed to foresee. We did this not just once or twice, but repeatedly. In doing so, we have consistently created significant value for our customers, employees, vendors, investors, shareholders, and society at large. Our value creation strategy for the future rests on the solid foundation of our track record, which is matched by very few companies globally. When we celebrated our 40th anniversary in 2017, I had promised that Reliance would enter the world's top 50 before our Golden Jubilee. I am pleased to inform you that this year, Reliance is among the world's top 50 most valuable corporations. In July 2018, Reliance crossed the 100 billion valuation mark. And in just 6 years, we have become the first Indian company to cross 250 billion in market value. In 2022, I promised that Reliance would double its value by the time we complete 50 glorious years in 2027. Friends, Reliance has never rested on past laurels. Complacency is not in our DNA. I am supremely confident that Reliance will continue to reach new heights of growth and profitability in the future. It has been my privilege to establish, lead, and nurture our 5 growth engines: O2C, retail, geo, media, and green energy and fuels. We are uniquely positioned to grow new businesses around the adjacencies of all these growth engines. Today, 3 of these engines have a valuation of over 100 billion each, and they will continue to grow even faster. As I have already explained, geo and retail are expected to double their revenues and EBITDA in the next 3 to 4 years. I see immense growth potential in our media business. Our new energy business will be the new jewel in Reliance's crown. I foresee it becoming as big and profitable over the next 5 to 7 years as our O2C business, which we have built over the past 40 years. And I am confident that green fuels and AI-based solutions will become long-term growth engines for Reliance. Overall, the Reliance Group is well on track to more than double in size before the end of this decade and grow faster in the decades ahead. This will further cement our position among the most respected and valuable companies in the world. My esteemed shareholders, when it comes to our value creation strategy at Reliance, we have always believed in speaking by action rather than words. Therefore, I have full confidence that the future growth prospects of all our businesses will become a reality within the timelines outlined by me. Higher growth will surely bring richer rewards for you. This confidence is reflected in our notice to the stock exchanges that the Board of Directors will meet on 5th September to consider issuing bonus shares in the ratio of 1:1. I assure you that we will continue to operate within our prudent financial framework, allocating resources to projects and businesses that deliver superior returns to our shareholders while ensuring our balance sheet remains robust. I seek your continued support in this endeavor. Dear friends, I want to share some thoughts on our continuing efforts to strengthen the institution of Reliance. Today, Reliance is more than just a company. It's a proud national institution, an institution that belongs to the people of India. I firmly believe that my family and I, and also other senior members of the management team, are simply trustees of this great institution. Personal or family wealth holds no importance for me. What truly matters is our responsibility to pass on this precious institution to the next generation on a solid foundation. This will enable them to elevate Reliance to even greater heights of success. In my previous addresses, I have discussed our philosophy and plans to enrich our institutional culture and perpetuate our value system, especially as Reliance navigates this period of generational transition. We are executing these plans with utmost dedication. As Reliance takes on new and greater challenges, we will need an ever-expanding pool of capable leaders. Leaders who are fully committed to the purpose, philosophy, passion, and pioneering spirit of our founding chairman, Shri Dhirubhai Ambani. I'm personally devoting the largest part of my time to this task, along with our esteemed board members and senior colleagues. I'm pleased to report that we've made tremendous progress in these efforts. Dear friends, Akash, Isha, and Anant have just completed 1 year as board members. They have stepped up to take on greater responsibilities as first among equals in Reliance's next generation leadership. I congratulate them on their excellent beginning. In addition to them, we are mentoring a large team of dynamic and exceptionally competent young leaders who are eager to assume bigger roles at Reliance. We continue to grow a professional talent pool from around the world, aligning with our vision of making Reliance a global corporation. Working with this army of motivated, talented, and ambitious youngsters inspires and energizes me every single day. It has strengthened my conviction that Reliance's future is in safe hands and its legacy of superior value creation will continue to flourish. My dear shareholders, I mentioned at the beginning of my address that in a world of many uncertainties, the continued rise of New India is an absolute certainty. No force on earth can stop our beloved nation's march towards the goal of Viksit Bharat. I know that the people of India have great expectations from Reliance. And from this platform of the AGM, I assure my fellow countrymen that we are determined to exceed your expectations. I also know that India needs vastly more entrepreneurs, both big and small, so that we can fulfill people's rising aspirations for a better life. Indeed, India needs dozens of Reliance so that we can build an inclusively prosperous and fully modern developed nation by 2047. Now is the time for all businesses in India to work together as a grand coalition with the spirit of cooperation, collaboration, and mutual support. Today, I pray to God Almighty to continue to shower His blessings on Reliance so that we can continue to serve Mother India as a humble and devoted member of this patriotic coalition. Finally, on behalf of all our shareholders, I heartily thank our board of directors for their guidance and oversight. My appreciation to all our employees, our greatest asset. Your dedication and commitment have helped the company scale new heights. I would also like to thank our business partners for their consistent support in delivering quality solutions. And last but certainly not the least, I convey my deepest gratitude to India and all Indians for keeping faith in brand Reliance over the years. Thank you and Jai Shri Krishna.
it looks like Jack Smith doing more of what he does, which is filing these absurd lawsuits in an effort to influence the election. The president doesn't have some level of immunity in how he conducts his office, in the same way that judges have to have immunity, police officers have to have immunity. There has to be some recognition that people can't be sued for doing their job.
So help me God.
Hello and welcome to this special broadcast. I'm Reema Tendulkar. With me is Nisha Poddar, and these are the key headlines from Reliance's 47th AGM. Reliance Industries is transforming into a deep tech company with advanced manufacturing capabilities, says Chairman Mukesh Ambani at the 47th Annual General Meeting. Adds the conglomerate is on track to more than double in size before the end of this decade.
The Reliance board will consider a 1:1 bonus issue on the 5th of September. The move to reward the shareholders takes the stock higher in trade. No word on the potential listing of Jio and Reliance Retail.
Reliance Jio will roll out AI cloud services from this Diwali, will offer 100 GB cloud storage for free as a welcome offer. Aims to double Jio's revenue and EBITDA in 3 to 4 years.
Isha Ambani says Reliance Retail will double its business in the next 3 to 4 years. The company is now among the top 5 in the world in number of stores.
The new energy business will be the new jewel in Reliance's crown, says Mukesh Ambani. Will set up a multi-gigawatt electrolyzer manufacturing facility by 2026. Expects new energy to deliver earnings like O2C business in the next 5 to 7 years.
With an eye on embedding innovative technologies in every single business and another on powering India to a leadership position in green and clean energy, Reliance Chairman Mukesh Ambani laid out the conglomerate's roadmap at their 47th Annual General Meeting. Here are the highlights.
Our founder firmly believed that you are the backbone of Reliance, and that you deserve a substantial reward from time to time as your company grows from strength to strength. I have supreme confidence in the robust performance and the bright future growth prospects of all our businesses. Based on this confidence, I would like to share some good news with you today. At 1:45 p.m. today, Reliance Industries Limited has sent a notice to the stock exchanges that the board of directors will meet on the 5th September to consider issuing bonus shares in the ratio of 1:1. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards R&D, taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage. We plan to launch the Jio AI Cloud welcome offer starting Diwali of this year, bringing a powerful and affordable solution where cloud data storage and data-powered AI services are available to everyone, everywhere.
The Jio Home app is your personal control center, letting you manage everything in your home, from your Wi-Fi to your smart devices with just a few taps. Because your security is our top priority, Jio Home app includes features like malware detection and guest Wi-Fi management, keeping your home network safe and secure.
We opened 1,840 new stores this year, bringing our total store count to 18,836 stores, with a retail space of 79 million square feet in total. With the strong foundation we have built, I am confident that we will achieve our goal of doubling our retail business in the next 3 to 4 years.
Well, that is the big headline, right? Double Reliance Industries in size before the end of this decade, and double Reliance Jio's EBITDA and revenues and Reliance Retail's revenues in the next 3 to 4 years. And just to put that in context of the kind of growth we're talking about, the size we're talking about. Now, Reliance Industries on a consolidated basis had revenues of over 10 lakh crore rupees, and we're talking about doubling that before the turn of this decade. Reliance Jio had revenues of 10,000 crore rupees, margins of more than 52%, double that in 3 to 4 years. And Reliance Retail has revenues of more than 30,000 crore rupees. So, true to form, this time the Reliance AGM has set the vision, and the vision is to grow, become bolder, bigger, and target aggressive growth. We have with us a panel of experts to decode, the intricacies of Reliance's AGM this time. Sunny Agarwal of SBI Securities is with us. Prakash Diwan, market expert, also joining in, and Dhruba Purkayastha of CEEW is with us. Gentlemen, thank you very much for joining in. Prakash, your quick words first. For value unlocking, the street was awaiting, perhaps it will come in via the IPO route for Reliance Retail and Jio. But instead, while, Mukesh Ambani, the chairman, has not touched upon that, he has set out bold and big targets. Do you think there are enough catalysts in this Reliance, in the 47th AGM? And then take us through what stood out for you.
So, Rima, as you rightly said, while the IPO roadmap hasn't been touched upon, what seems to be the strategy is to make Reliance Jio much bigger, much more, stronger, and much future ready before you talk about any IPO plans. So, if we leave the announcement on the aspiration to double EBITDA and profits in the next 3 to 4 years, look at what investments are going into it. Look at which direction the investments or resources are being applied. You are talking about making it a deep tech company, making AI so accessible, getting into data centers to support this, running these data centers through green energy. I mean, there's a host of things that revolve around the Jio bandwagon before it gets future ready. Now, all it does is, this will not make, my take is, if I were waiting for the Jio IPO to happen in some form, in some kind of timelines, I'm willing to wait if these investments make it even a bigger bet. So it's very clear that from that 10 lakh crores, you could probably be seeing it catapulted to probably double the size by the time an IPO is crystallized. So all in all, I think it's an excellent roadmap for what transformative changes that are likely to happen in Jio. And the other part that, the key takeaway is the green energy business seems to be real and just around the corner. I mean, if you're talking about electrolyzer capacities, if they're talking about solar modules being made by end of this year, it's just a matter of a few months before you will start seeing some of these things roll out. So I think it's very clearly an AGM that has the set of announcement that has made all of those aspirations which were outlined in the couple of previous AGMs to be reality in a much quicker way. So, that's the beauty. The scale is phenomenal. And of course, now you also have the bonus issue to kind of celebrate in terms of at least 10%, 9% of the capital reserves getting capitalized. So all in all, I think it's a wonderful way to look at the business in a very different, scaled up, future ready way.
That's right. So future-ready business is being created, Prakash, and of course, the 75,000 crore rupees of new energy investments that was announced a few years back. An detailed update has been given, and one particular highlight of this is also that the new energy business in 5 to 7 years can scale up akin to O2C kind of business and the earnings there. Sunny, what stands out for you when we talk about the Reliance Industries AGM and the forward-looking statements and the vision stated by Mukesh Ambani?
Hi, good afternoon. I think the most standout factor was the clarity on growth for the new energy business. So a lot of clarity has been given individual sector-wise what will happen on CBG side, whether it is a solar PV side, green hydrogen, BESS, and at the same time, the most important point was the profitability of the new energy business will be similar to O2C business, which is currently at close to 60,000 crore rupees EBITDA. So I think in the next 5 to 7 years, this new energy business will start contributing north of 50,000 crore of EBITDA. In a nutshell, what I feel is that for the next 3 to 4 years, maybe telecom and the retail business will grow at a 20% CAGR in terms of profitability. And that will drive the overall growth of the entire Reliance as a consolidated entity. And post that, new energy will take the baton and will start contributing to the growth. So maybe at the overall company level, oil and gas and O2C may remain a kind of a low single-digit kind of growth. Telecom as well as retail may contribute more than 20% growth in terms of profitability. So overall, on a console basis, maybe 12 to 13% kind of PAT CAGR is something which we can look at for Reliance over the period of next 3 to 4 years. And post that, new energy business will take the baton and will start contributing aggressively in terms of growth.
Dhruva, come in. Assess the new energy aspiration laid out by the chairman, Mukesh Ambani. Do you think it's a bit aggressive? Or even if it's aggressive for Reliance Industries, it's possibly realistic, because they've shown in the past that what seemed to be impossible, they've made it possible. So how would you assess this goal they've set out for green energy to make it as profitable, to have that kind of earnings growth in the next 5 to 7 years as O2C?
Thank you. I think you said it all. Reliance has a track record of making a lot of impossible from a scale point of view to making it possible. And let me just take on what I heard very intensely on the new energy business. It is really, really heartening and encouraging to think that the entire energy value chain, and what I call the clean energy value chain, has been covered in this AGM. And Mukesh Ambani has referenced each parts of the value chain. Let me just kind of detail this out a little. It is not only solar, it has got biogas, it's got coal gasification, it's got electrolyzers, it's got everything around, and green hydrogen and the entire value chain. Where it resonates with us at CEW is basically on the angle that we are taking today in our research and policy advisory. We happen to be India's leading policy think tank on these lines, is like securing the fuels of the future. And this is exactly where these investments are coming in terms of, I would say, the scale at which Reliance operates is essentially driving costs down when green hydrogen and subsequent value chain additions will become a reality. See, look at India being in fuel shortage, and that's what we have lived through for 50 years. Today, fuels are not coming out of what is there, You're not in a geographically locked situation that whether you have oil or not, and coal is shifting gradually. But at the same point of time, I was encouraged to see coal gasification over there. It may be a transition element. So the entire value chain, I would expect it to drive the cost of green hydrogen, compressed biogas, the entire green value chain, and it can even lead to exports of green hydrogen, which can happen in the form of liquid ammonia. So this is highly encouraging to see the scale of investments. I'll stay out. There are a lot of market experts here. I'm not commenting on how it will hit its bottom line, EBITDA, and multiples of how it will get treated in the market. Yes, it is aggressive, but this is what the direction that India needs on becoming an Atmanirbhar Bharat. So I'll pause here. Thank you.
Right. Dhruva, hold on to your thoughts. Lots more to discuss on this, because the entire vision also articulates various pieces of the entire renewable energy ecosystem. And especially when Mukesh Ambani said that to make this renewable energy less, sporadic, but more predictable by round-the-clock renewable energy and also battery storage. So those are very critical pieces where he articulated the vision, which is already underway. But gentlemen, hold on to your thoughts. Lots more to discuss on Reliance Industries AGM announcements right after this short break.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or rupees 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which
Welcome back. You're still with us on this special broadcast where we decode 47th Reliance Annual General Meeting. Now, Prakash Diwan, we were discussing the various aspects of the AGM announcement. Now, it looked like a large part of the announcement as well as the speech by the chairman was heavily tilted towards technology, and especially the latest technology of deep tech as well as artificial intelligence. Now, certain big announcements that were really made in the case of Jio AI Cloud and the bumper offering around Diwali time. So apart from bonus, that's a bumper Diwali bonanza for Jio customers. And on the other hand, also the ambitious targets of Jio Air Fiber of 1 million homes in 30 days, besides many other aspects that were really laid out. What do you make of the AI thrust and the digital as well as a technological thrust? Prakash, you're on mute.
Sorry. So I'm saying, I'm glad you raised this particular point, Tisha, because out of all the announcements, the most impactful and market moving could be the one on Jio. You know why? Because the offer that he's talked about, the 100 GB cloud, it's absolutely unbelievable. Indians love to store things. We've been relying on some 15 GB kind of availability from Google and all this while. And now if you had this kind of a thing, you can imagine the kind of subscription that they would get, the kind of porting that will happen to Jio. People who are still not able to decide whether they should port to Jio will probably, this will be a big incentive. Now, the other thing it does is it gives an edge which no other telecom service provider has. You look at Bharti, you look at Vodafone, they're nowhere close to weaving in AI in their entire offering. So this becomes a significant differentiator for the next leg of growth in a phase where ARPUs are increasing. So this will also lead to that ARPU growth, which has been so elusive all this while. The second thing on the home, Jio Home, it's very simple. I was talking about this before the AGM that given the RIL Disney JV, there is no reason why you will not avail of the FTTH or the home this thing offer, for the simple reason that it comes bundled with so much of content and so much of high-end technology-driven, OTT experience. So I think it's going to virtually take over your mind space and your, room space and your eyes share, because there is nothing that you need to rely on in terms of, getting it from different various services, whereas you would have a one-stop solution for all your digital needs. So I think it's definitely going to add to a huge subscription. Rima's there. She can tell you how this could translate into this. And Jio's contribution in the SOTP, if you really look at, it's close to, in the 3,000 odd price. If you see, I think it's probably close to 1,250. Now, if that 1,250 goes up even by 10-15%, automatically that reflects in the stock very well. So that's what's going to make a big difference on the stock at least, and in terms of anticipation of high growth. And anyways, he's spoken about a 23% CAGR growth rate. If you look at 4 years, that EBITDA is going to double. So that 23% CAGR itself is far higher than what the company is growing at. So extremely excited to see what Jio can contribute to the overall Reliance stock and its journey going ahead.
That's right. And Jio has always added to the competitive intensity, and this time for the global players also. And remember that digital democratization was one thrust a few years back. And this time what stands out is the democratization of AI, which is the newest technology. And he did say that he wants to end India-Bharat divide and also make connected intelligence by giving AI to everyone, everywhere, everywhere, even on the low-cost smartphones. So that's one of the big things which is going to put pressure on the overall sector as well with this particular bumper offer. But Dhruva, one particular point on the ambitious plans on new energy that Reliance Industries has. What does it do to India's thrust towards renewable energy and the government's targets towards it?
Thanks, Nisha. This actually supports very well aligns, because if you look at India's targets, which are global commitments of 500 gigawatt, there is a supply chain that is required. There is investment in the entire supply chain, which is from silicon to the panel. That is what I saw in terms of solar kind of cities, which are green energy cities, which is being conceptualized. So I think, one, it supports the solar, the renewable energy initiative, and some of them are new ones which are exploratory. And the exploratory ones indicated are very, very interesting. It indicates geothermal exploration. It indicates coal gasification. It also talks about huge scaling up of compressed biogas. And it talks about growing plantations behind them. So if you look at the entirety and not only focus on solar, the missions that India has is about non-fossil fuel sources. We just happen to think solar because that's on top of our mind. So it is hugely supportive on that. And its complementary is the investment in so-called battery manufacturing or grid scale battery. And that's exactly what we need to get renewable infirm power to a firm state of 24/7. So I look at all of these has been well researched and complementary, and it gets very well aligned to India's mission, including hydrogen missions that India has. Thank you.
Okay, and we've got time for just one final question. So Sunny, let's wrap up this discussion. It's been a great discussion with you. What, according to you, should be the fair value of Reliance Industries post what we've heard? Do you think EPS upgrades are likely in store given the growth ambitions set out by the company? And it also, this time, there was no large big bang capex which was announced. That 75,000 crore was just commitment to what was earlier announced. So it's clear the company is now beyond its, the capex phase, and it's now transitioning to benefit from the capex that it's earlier done. So does that provide an incremental upside?
Yeah, I feel a minor upside is possible. However, I feel that it would like to wait for Q2 numbers. So I think it was very well-known fact that it is a retail as well as the telecom business, which will be the value growth driver. So if you look at the current juncture, almost at EBIT level, both cyclical businesses and these consumer-facing businesses are contributing 50-50 at EBITDA level. And going forward, as we see the shift inclining towards the consumer businesses, obviously there will be slight kind of re-rating. But in terms of upgrade, I feel maybe post Q2 numbers, we may see some upgrade. As of now, I don't expect any major upgrade immediately post this AGM. However, all the commentary has been in line with expectation, especially on telecom, retail, and a lot of clarity has been given on the new energy business, which analyst community will start building in their model maybe 3 to 4 years down the line.
All right, Sunny, Prakash, Dhruva, thanks so much for all your insights. From Rima and myself, it's a wrap on this special broadcast, but keep it with CNBC TV18. Thanks so much.
Believe will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats.
Hello and welcome to Business 360. I am Ashmit Kumar and here are the headlines that we're tracking this evening. Reliance Industries is transforming into a deep tech company with advanced manufacturing capabilities, says Chairman Mukesh Ambani at the 47th Annual General Meeting. Adds the conglomerate is on track to more than double in size before the end of this decade. Nifty hits a record high and closes at a new peak for the 11th straight session. Sensex gains 350 points, but mid-caps underperform. Block deal worth 11,000 crores in Interglobe Aviation. Over 2 crore shares worth 6% stake change hands. Co-promoter Rakesh Gangwal is the likely seller. With today's share sale, Gangwal in the last 2 years has sold 23% stake worth 27,000 crores, and he still holds 13% stake worth 25,000 crores. SEBI chief Madhabi Puri-Book makes her first public appearance since the Hindenburg allegations, promises to ensure no delay in approving IPO applications at the Global FinTech Summit. Israeli forces strike refuge camps in West Bank on the second day of its assault. Israel claims it killed 5 militants during yesterday's raids. European Union officials warn Israel not to extend the war in Gaza to the West Bank. OpenAI is in talks to raise funds which could value the company at $100 billion. Sources tell CNBC Thrive Capital is likely to lead the round with $1 billion investment. Warren Buffett's Berkshire Hathaway hits $1 trillion in valuation, becomes the first non-tech company to reach the landmark after Apple, Microsoft and Nvidia. Well, let's begin with a quick look at the day's market action. The Sensex and the Nifty ended higher, even as mid-caps underperformed in trade today. The Nifty hit a record high in intraday trade and also ended at a record close for the 11th straight session. Mid-cap index ended in the red, however. Nifty Bank Index, meanwhile, ended flat. Well, speaking of the market, SEBI chairperson Madhabi Puri-Book has said that the market regulator is ensuring that there is no delay in providing approval for fintech companies for their initial public offerings. In her first public appearance since the Hindenburg report was released at the Global FinTech Fest, Book added that SEBI does not want companies to wait for approvals when there is so much opportunity in the capital markets.
We have been focusing on saying that if the fintech industry has reached a certain level of maturity and now they want to IPO, the private equity investors want to exit, the markets are good, this is the time when we should not be wasting time in giving approvals. So as you're seeing, compared to when we started tracking in March of 2022, and we had a very large number of IPO papers pending more than 3 months, today we have just 8. And most of those are really in the realm of where there is either a judicial intervention or there is a regulatory approval pending from another fellow regulator, and which is why they are still pending at our end.
The government has allowed companies to list directly on international exchanges within the GIFT City's IFSC with a minimum public float of 10%. This is significantly lower than the 25% requirement for listing on domestic exchanges. Sapna Das joining us now with more details. Sapna, take us through this latest government plan for listing for public float at just 10%.
Well, no doubt this is an important tweak done by the government to help all those unlisted companies raise foreign capital from the IFSC. So the minimum IPO size has been, reduced to 10% odd. Otherwise, under normal circumstances for listed companies on the BSE and the NSE, it's up to 25% odd is the minimum public shareholding norm, but that has been tweaked and kept at 10%. For all those companies interested in accessing foreign capital from the IFSC. The rationale for this is also very clear. This will help not dilute promoter ownership. This will also help those companies have access to higher voting rights, which is what the feedback is in terms of what the investors have been telling the government. And hence a 10% IPO size is what has been mandated. So they need not go right up to 25% odd simply for the rationale that I have explained. But it will depend company to company in case they want to raise or rather they want to dilute their stake further. That would be up to them. But a minimum 10% odd and maintaining at 10% odd in the years to come is good enough as far as the Government of India rules are concerned. That's one. Second, this is going to be a big boost for the sunrise sectors, especially e-commerce, tech companies who are in any case attracting foreign capital in some shape or the other, and if they're interested, they can do it now directly by listing at the IFSC. Last but not the least, we are given to understand that under MCA there would be around 5 to 6 lakh odd companies, out of which barely 5,000 are listed. So this is a big step as far as the unlisted Indian companies are concerned for them to help raise funds in any of the hard currencies that they would like.
Right, Sapna, thanks a lot for that. But with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
and award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com.
Hello and welcome to News Center. I'm Parikshit Luthra. If you are an influencer with a substantial subscriber base and have no qualms about promoting the Uttar Pradesh government schemes, you can make a lot of money. The Uttar Pradesh government has rolled out a new digital media policy that will pay influencers a substantial sum of money if they have a strong subscriber base and if they are ready to promote their schemes and initiatives. That is the UP government schemes and initiatives. The government in a note said that the move will also help in generating job opportunities in the state. As per the policy, an influencer can earn a maximum of 8 lakh rupees per month However, there are penalties in place as well. Shivani Bazaz decodes the Uttar Pradesh digital policy for us.
Well, yes, the Uttar Pradesh government has approved a new social media policy that combines lucrative incentives for influencers with stringent penalties for objectionable content. Under this policy, influencers promoting government policies can earn up to 8 lakh rupees per month, depending on their follower counts across platforms like X, Facebook, Instagram, as well as YouTube. Now, the Uttar Pradesh Digital Media Policy 2024 is designed to provide advertisements to individuals and agencies that create and share content about government schemes. Influencers will be categorized into 4 groups with their earnings determined by their reach. For instance, on X, influencers can earn up to 5 lakh rupees per month, while Facebook and Instagram offer caps of 4 lakh and 3 lakh respectively. YouTube content creators could see payments up to 8 lakhs for standard videos, 7 lakh for shorts and 6 lakh for podcasts, with other content types capped at 4 lakh rupees. However, the policy's incentives come with strict regulations as well. Content deemed anti-national, obscene or otherwise objectionable could lead to severe consequences, including life imprisonment. This aspect has sparked concerns over potential restrictions on freedom of expression. However, remember that these restrictions are in place only for influencers collaborating with the Uttar Pradesh government for the advertisement campaign under this new policy. It is not a blanket rule applying to all influencers in the state. In addition to the financial rewards and penalties, the policy envisions a system of registering agencies tasked for promoting content related to the state's achievements. These agencies will work alongside influencers to amplify the government's message across digital platforms. So all in all, Uttar Pradesh government is looking to use the reach of influencers to market its own campaigns and the state's achievements. Back to you.
To take this forward, I'm now joined by Advocate N.S. Napinai, also the founder of Cyber Saathi Foundation, also on the show with our senior advocate, Sajan Puvaya. Thank you very much for joining us on the program. Ms. Napinai, how do you see the contours of a policy of this kind? Clearly a first for this state. Yes, they do give the media, the news media as well, advertisements, which can be a substantial sum of money. But to have a policy for influencers, this definitely is a first. How do you see this?
Well, it's an interesting take. You know, when I was writing my book, Sassy Tales, and I had a story there about social media influencers and the money they can make, many people questioned me about, is this real? Today, at least a policy document itself sets out that it can be a reality. But there are just certain things I wanted to clarify here. In the opening statement, your anchor mentioned about the stringent provisions under the policy. See, on one hand, the policy, as was rightly pointed out, is limited to those influencers empaneled with the UP government. But it would be a little incorrect or misleading to say that the provisions with respect to what kind of content can be disseminated, meaning the restrictions with respect to obscene content or misinformation or content that could tantamount to cyber terrorism, that is not really limited only to influencers. These are restrictions which come under the Central Act, which is the Information Technology Act, and the rules framed thereunder for intermediary guidelines. So to say that, the policy in any manner lays down stringent restrictions or limitations would be a little misleading. It merely references the IT Act and says that if you violate the IT Act, you run the risk of losing your empanelment and other legal action.
Right. So you're saying that whatever is there in the IT Act in terms of penalties, that has been replicated in the UP government policy. Sergeant Puvaya, how do you see the policy which says that an influencer, if he has a substantial following and is promoting the UP government's content, can earn up to 8 lakh rupees. But at the same time, if you use that money or if you use these platforms to put anything defamatory, then you could also face life imprisonment as per the provisions of the IT Act.
I think we are making a monster out of this policy. Quite frankly, Parikshit, the policy, in my reading of the policy, I think the policy is absolutely fine. A state has the freedom in our federal setup to spend money, to advertise its achievements, to advertise its schemes, to advertise its programs. Every state in the country typically issues paper publications, advertorial materials, uses electronic media advertisements to publicize their achievements. 3, from history will show that from the time we were an independent country, almost all states and all major states have had an information and publicity department ingrained in their administrative setup, and the information publicity department has been publicizing the activities of the state, programs of the state. All that this policy does is it actually finds another avenue in terms of digital media. It says that influencers can be used to actually publicize the achievements and policies of the government, and consequently they will be paid. How much they should be paid, etc., I will not comment. Newspaper advertisements are as expensive, so let's leave the money component out. But on the issue of penalties, I think everybody is misreading the policy, and Napina is right. All that the policy says is that if you are an influencer empaneled with the government and you undertake certain activities which are illegal, in the sense that you have actually put defamatory content, not so much defamatory content, you have put content which violates any of the legal rights, which is illegal, or it is terrorism oriented, which affects the security of the state, then the government can actually prosecute you. But prosecute you under what? Prosecute you not under the policy, but prosecute you under the law of the land, which is the Information Technology Act. 66F of the Information Technology Act provides life imprisonment for cyber terrorism. 66E for violation of privacy provides a 3-year imprisonment. Therefore, there is no problem with the policy at all. The policy dovetails itself to the law of the land today, and I think the state has the freedom to do what it will in terms of publicizing its achievements.
Right. N.S. Napinaik, do you believe that this is a policy that could be replicated by other state governments as well? As Mr. Sergeant Puvaya was pointing out, it is another avenue for promoting the achievements, and this has been done by different state governments?
Absolutely. There is a strong possibility that this will be replicated. And we've already clarified on this aspect that there is a misreading of the policy in most of the news items in terms of understanding what is the restriction or limitation that is being put down. So I just wanted to clarify one more aspect on it. Even with respect to these restrictions or limitations, what the policy sets out is with respect to the influencers empaneled with the UP government. It is not really extending beyond that. Under law also, it cannot extend beyond that. IT falls within the union's domain, and therefore you have the Information Technology Act coming from the central government, and anything that happens within the domain will be regulated through central laws and regulations or rules. So in terms of the viability of something like this, I would assume that states would wait and watch and probably duplicate this.
Right. Going forward, Mr. Puvaya, do you believe that a policy of this kind needs more guardrails? Even at a central level, the government is considering a broadcasting services regulation bill. Even there, the role of influencers is being looked at, but that is at a drafting stage right now. A lot of debate and negotiations are going on. What are some of the things that we need to think of which you can feel come out of this UP government policy?
Parikshit, I think you raised a very crucial issue. If you look at the scenario of the bill, which is actually to regulate broadcasters, which is the attempt of the central government, and juxtapose it to the policy of the UP government, I think we should be clear and careful in our mind not to muddy waters there. What the UP government is doing is essentially indicating that it will use influencers by empaneling them and using their influence over social media to disseminate information pertaining to the government. There is nothing wrong about doing it. There is nothing wrong about paying influencers for such activity. And there is nothing wrong in cautioning those influencers who are empaneled to say that if you commit illegalities, you will be prosecuted under the law of the land. No problem with it. But the broadcasting bill is a larger issue. In the broadcasting bill, the attempt is to actually elevate these influencers or elevate people who have influence on digital media to the level of a broadcaster and therefore regulate them from particular perspectives by imposing maybe conditions, restrictions, etc. That's a completely different jurisprudential debate. I would really think at this stage, we should let the policy be as it is. It is, after all, a policy. It is an administrative document. If you believe that the policy has been misused, it will be, challenged. if you believe that the policy has been used wrongly to prosecute somebody, they will defend themselves under the law. But a new law which is being brought in to actually, in some form or the other, circumnavigate the broadcasting globe in the country and regulate broadcasting, including digital media, is a more serious issue that has impact on free speech, that has impact on independence of the internet, all of those issues which I think are beyond the policy today, and we should let it be for a different debate regarding the broadcasting bill.
Right. That is a separate policy, as you said. My last question to Ms. Napinai. Ms. Napinai, this UP government policy, as it stands right now, the state government believes it will also create more job avenues for people in the state. Do you believe this will have many takers, considering the avenues for earning that influencers have today?
I would like to start with a word of caution for maybe on the anvil and it's still not the law of the land, but they are governed already under the Consumer Protection Act, and they are liable under the category of endorsers. So if you are endorsing an advertisement, as in you're advertising for a product or service, you can be held liable for misinformation or disinformation or fraud, etc. So you need to understand that you are already regulated under a central act, and please look at the guardrails that are set out there before you undertake any activity in terms of being an influencer. This applies generally as well as under the UP government's policy. So when you ask me about specifically about the UP government policy, as has already been pointed out by Sajjan, why not? You know, being an influencer is now considered a mainstream job or a job option too. So if they have built an influencer base and they are being utilized for promoting government schemes, etc., then that is permissible, and that is something that the guardrails, I would say, are actually put in place within the policy document by laying down what are the do's and don'ts that an influencer can do in the context of what they undertake as part of the empaneled process.
All right. Thank you very much, Ms. Napinai and Sergeant Puvaya, for joining us on the program. So you are saying the only piece of advice for those wanting to subscribe to the UP government's policy for influencers is read the IT Act thoroughly. Whatever guardrails are there will apply to you as well. We're taking a short break, but coming up on the other side, Marico MD and CEO Shogoto Gupta says the company is well on track for double-digit revenue growth and aims to make Marico a very successful digital-first company in the next few years. That exclusive coming up.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Transforming Reliance into a deep tech company with advanced manufacturing capabilities in 3 seminal ways. First, we are embedding innovative technologies in every single business to generate ever greater value for our customers. Second, our talented engineers and scientists are incubating several critical technological innovations in-house to enhance our product and service offerings. Third, we have built an AI-native digital infrastructure for all Reliance businesses and have built our software stack, integrating end-to-end workflows and real-time dashboards. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards R&D, taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. Today, to support our AI everywhere for everyone vision using connected intelligence, I am thrilled to announce the Jio AI Cloud Welcome Offer. Today, I am announcing that Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage. With current data prices that are 1/4 of the global average and just 10.
Welcome back to News Center. Leading FMCG company Marico expects double-digit revenue growth in the second half of this fiscal. That's the word coming in from Marico's MD and CEO Shogata Gupta. Speaking to me earlier, Gupta said that he expects some green shoots in the rural sector. I began by asking him about the company's targets for the second half of this year.
We are expecting gradual improvement in volume growth as we step into the next few quarters. Also, the anniversarization of all our price drops are taking place this quarter. So hopefully in terms of the revenue growth will be ahead of volume growth, and we aspire to at least start hitting double-digit revenue growth as we go into the second half. I think there are green shoots in rural. I think the worst is over for rural, and some of the steps which the government has taken, coupled with a more or less satisfactory monsoon, ensures that the rural growth will gradually improve. Inflation is broadly under control, and so therefore if there are no black swan events, we believe that there would be a slightly better volume growth as we move into the balanced 3 quarters of the year.
So any price increases that you're likely to take across the portfolio that could come in?
We have taken some price increases in parachute around that. So therefore, which will give us, as I said, this year, a kind of a revenue growth which could be higher than our volume growth. And that's why we are reasonably confident that we should be, getting into double-digit revenue growth in the back half of the year. I don't see any significant price increases as of now, unless there are any black swan events with respect to crude or any other material. But I think things seem to be under control.
Right. Speaking about your international business, and it's just not just for Marico, but for other companies as well, the global environment is quite volatile right now, both in India's neighborhood and in the Middle East. How do you see all the developments impacting your international business right now? And could there be some impact in Q2?
Look at it, I think, if you look at from COVID, which is 2020, and then Ukraine happened, I believe black swan events are now embedded as a part of risk management. And therefore, we have to be, resilient to face these kind of factors, geopolitical or otherwise, across the globe. I think fortunately for us, we have a very solid, strong international business. If you see, with a track record of significant profitability growth as well as double-digit revenue growth in most of the quarters in the last 3-4 years. And I also believe and we have coped with these kind of ups and downs in most of the businesses. So, and I strongly believe that, that our resilience is pretty high. So as far as the medium-term aspiration of delivering double-digit revenue growth as far as the international business is concerned is very much intact. Some of the places where we had issues, I think broadly the businesses have come back on track, and therefore we hardly see any significant impact in this quarter.
All right, so you're not seeing any significant impact, and your growth outlook remains intact. In terms of exports, give us a sense of the kind of growth that you are targeting. Any new geographies that you would like to aim at?
Most of our operations are, based out of countries. We have factories and overall operations out there. Very little is exported. Whereas obviously we do cater to the Indian diaspora in some of the Western markets where we are not present as an organization. But I must say that our international business is extremely robust. We also, because of our digital brands and some of the new initiatives, I think international business continues to grow. What is also interesting is, I think, because of, there is always a route back to Indian traditional habits like hair oiling is again getting popularity in some parts. In fact, there was a recent article in one of the big Western newspapers about hair oiling as a category. So we are pretty, I think, optimistic about it. Having said that, I think we will restrict ourselves into emerging markets of Asia and Africa, because where we have a right to win, while we will continue to perhaps export some of the some of our products into some of the, whether it's in Far East or whether it's in US and UK and some of the countries of Europe.
Right. Now, in terms of deploying additional capacity or investments, which aspects of your business or segments of your business would you like to invest most heavily in FY25?
I think we have pretty comfortable capacity. I think obviously we have a significant aspiration in foods, and this is where we are developing, I think, just not manufacturing capability but long-term supply chain capability, because as you know, food supply chain, it is not only capex intensive a little bit, but also there is a huge emphasis on stock freshness, given the shelf life of food is different from some of our other products. So we are gearing up significantly in our capability, and this is one area we will obviously continue to invest. As far as some of the digital brands are concerned, obviously they have a different operating model. We intend to not keep it, we want to keep it far more an agile operating systems, and they are not necessarily very capex intensive, but we want to run it as a far more agile, because they have multiple SKUs, they have far more shorter innovation cycles, and they operate with far greater agility and complexity compared to our business, which has a different kind of scale and complexity.
Right. So that brings me to my next question. Any new launches that you would like to probably give us a sense of, at least, with which you'd like to capture a greater market share?
Continue to have significant new product launches in food. Food is something which is a area where we have grown 4x in the last 4 years. We intend to double in the next 3 years, and this is something which is a strategic part of our diversification, because we believe that the total addressable market expansion available at Saffola is extremely critical and extremely big opportunity for us. So you will continue to see launches in foods. We are testing out certain things. Equally, we have a very, very action-packed agenda in some of our digital brands. And as far as the other core is concerned, yes, I think innovation is something we need to, we need to increase the momentum in some of our core brands also. But having said that, I think the diversification journey, as far as we are concerned with premium personal care, with food and digital, is very much on track, and we are so far tracking ahead of our aspirations this year.
In terms of growth plans for digital-first brands of Marico, what would be your plans for the next 5 years?
I think we need to get into a 1,000 crore plus business over the next 3 years and we are not only looking at growth, but we are balancing with profitability with double-digit EBITDA. I think 2 of our brands, Beardo and Plix, are on a high growth momentum with run rates greater than 200 crores, and therefore they have the ability in the next 4 to 5 years to hit 500 crores. And I'm, I think, very, very optimistic. And we will continue to look for both organic and inorganic opportunities as far as digital business is concerned. 3 years, 4 years from now, we would like to be known as not only a very solid FMCG company, but a very, very successful digital consumer company also.
So you're talking about becoming a strong digital consumer company. So can we assume that if there are acquisitions that Marico is eyeing, that would be in digital-first brands?
We look at everything. Having said that, I think we now have a working model that works for digital is concerned. I think we are a strategic investor of choice for a lot of founders who are doing exciting work, and therefore we are always on the lookout for it. Having said that, if there are opportunities and core opportunities and food opportunities, some of the international markets, yes, we always look at it. But having said that, I think one of the things we believe in is that acquisitions or inorganic growth can't substitute organic growth. It can be best an accelerator and not an escape button for not doing organic growth.
All right, so that was Saugata Gupta, the MD and CEO of Marico, on the company's growth outlook over the next few quarters. With that, it's a wrap on this edition of News Center. More news and updates continue right here.
I would like to share some good news with you today. At 1:45 p.m. today, Reliance Industries Limited has sent a notice to the stock exchanges that the board of directors will meet on the 5th September to consider issuing bonus shares in the ratio of 1:1. When Reliance grows, we reward our shareholders handsomely. And when our shareholders are rewarded handsomely, Reliance grows faster and creates more value.
In terms of earning growth, we see a moderation in earning growth for this year, and maybe for next year, mid-teens kind of growth. But overall, we don't think market is an overbought position, and is a more or less fair valuation, we do say. So more and more FDI, more and more FI and trade partners will come in next 5-6 years. For next 5-6 years, we do see a good investment in industrial side, especially on power side, railways, defense. So it's a much broader and longer theme. And Chinese players and Korean players are not present in India as well as in US and Europe. So complete opportunity for India and export opportunities also for India is very, very high comparatively. For next 6 to 7 years, the overall power sector investment, including generation and transmission, could be around 50 lakh crore.
What we are trying to do here is marry a huge macro with a lot of micro fintechs. The topic, navigating financial stability, a big macro issue, and challenges and opportunities in a dynamic global environment. How does that relate to fintechs? That's what our panel is expert at providing in terms of perspective. Now, the global environment is both shaped by fintechs and it shapes fintechs. Jay Surti from the IMF is here to tell us about how the global macros are placed. Will it be one of those seasons in the coming next 12 months where you can, raise money at 100x or at 200x or at whatever NVIDIA is quoting? Or do you think it will be a funding winter? So that relates very much to the audience here. And Michael Spiegel of StanChart is here to tell us how the incumbent financial system, the banks and financial sector, relate to fintechs. At what points is there a friction? At what points he will be able to use them for better banking? And Rajesh from TransUnion Cibel is here to tell us how the fintechs need to help in terms of better due diligence, or in terms of perhaps understanding that, what the RBI governor said, innovation, yes, but innovation with prudence. So he's here to bring that to light. I think we have an extremely well-rounded panel. Thank you, gentlemen, for your time. Jay, I want to begin with you. If you can draw up the macro environment, both in terms of, economy and, say, private equity and venture capital, do the next 12 months or, the foreseeable future look like a robust time when the fintechs will be able to find good funding? Or do you see red flags? I mean, the Nifty is at its all-time highs, the NASDAQ is at all-time highs. So is it going to be good funding period, or is it going to be some funding winter because of a red flag?
I think, Lata, an appropriate starting point is financial stability risks from higher for longer rates. This has gradually been priced in the US, and it certainly has strong implications potentially for global markets. Now, at the moment, markets appear to be comfortable with the current outlook and scenario, but there are three things to watch out for. First, uncertainty remains high, and fiscal and political uncertainty in particular we have seen is already generating a lot of data dependence, which has led to volatility in markets. This brings me to the second point, which is emerging markets and developing economies are no longer viewed as being decoupled from US monetary policy. And third, on sectoral vulnerability, a cohort of households and corporates do appear vulnerable. So I'll just take 2 minutes to briefly go through this. On the first, on uncertainty and rate expectations, at a global level, high uncertainty has already led to volatility spikes. We've seen this in foreign exchange markets in some EMDEs. We've seen that in some spread widening of sovereigns over safe asset returns. What's important is that in the US, the strength of economic activity and sticky inflation are being reflected in expectations of increased inflation and policy rates. And what this basically means is that if there are shocks and surprises, you can expect long-term US rates and therefore global credit conditions and financing conditions to tighten quite rapidly.
Tighten going forward?
Well, it depends. As I said, if there are adverse shocks and surprises which reflect some kind of realization of risks
so
around
you're not in the camp which says that we have already seen the highs of interest rates. You think
I wouldn't quite say that. I think what you described as the current outlook, that there are benign funding conditions, that EM financing conditions have been good, yes. Rating outlooks have been sort of improving. Net rating updates are now in positive territory in EMDs. If you look at equity market funding costs, these are, equity markets have been buoyant, credit spreads are at historic lows, there are some exceptions. This is all true. It's just that the kind of uncertainty we have around the outlook, and particularly given that this uncertainty has political and fiscal ramifications, is still quite high. And so the likelihood of things going wrong is still high. And as a result, if some of this uncertainty realizes in the wrong way, then you could have a whiplash in markets. And so the sensitivity of US long-term rates does appear to be high relative to some of these uncertainties being realized. And my point about EMD is not being decoupled is that if US long-term rates were to go up, then this could whiplash across the world, basically. So that's where
just, I mean, this is a topic for a whole day or a couple of days actually. But are you a believer that we will get or we are in a soft landing, or do you think we are being too confident?
So I think it's a little bit difficult to say at the moment. Our view was, in July, about a month ago, was that the outlook was, as we described, the central outlook was looking kind of softer, but we are seeing, there are two types of issues here. One is the political uncertainty, and that seems to flare up again and again.
Yeah.
There are two centers, at least in the world, where this is particular, but everyone is involved.
Yes.
The other thing is basically fiscal uncertainty, and public debt burdens are very high, and therefore, mistakes can be costly.
Yes.
Fiscal authorities need to do a lot to sort of tighten and lower leverage. And there's a lot of refinancing needs coming up in the next 2 years in frontier markets.
Yes.
So there are pockets of vulnerability which may actualize if some of this uncertainty kind of realizes.
Okay. So I think Jay has put all the warnings on the table for those who want funding and those who are looking at a stable environment so that business can go on for fintechs. Which brings me to the person who represents the incumbent financial system, the large bank, Michael Spiegel from StanChart. Michael, let's assume that the global macros don't get so bad. As a key banker, how are you looking at the fintech space? Do you think they are abetting banking transactions, making it easier to do due diligence, inclusion? What's the report?
So look, I think Bill Gates kind of started a big notion and motion sort of in the 1990s. So in 1990 is that the world needs banking, but it doesn't need banks. And in 94 he topped it saying that banks are dinosaurs and we can bypass them. So we saw a huge increase in investments into fintechs. And I would just add one element potentially, and that is that from an equity perspective and from a VC perspective, due to the higher interest rates, there's less patience. So I think there's a bit more pressure on startups and fintechs as well to generate positive cash flow. Now, are there positive or negative? I think generally I welcome fintechs very much, and I actually think it's been very good for the banking industry. Now, some people say banks are not innovative and only fintechs and tech companies are. I think that's not quite entirely true. My personal view is that the world will continue to need banks, and in all economies, but it needs banks that have adapted to the new norm. And in my view, and I've held this for many years, the old ecosystem of one bank to one client relationship is passé. So what we have is banks, clients, fintechs, tech companies, and ideally regulators. Now, regulators you don't really have in every market as well as you, for instance, have in India. When you think about the development of UPI, which was initially driven perhaps more from a government perspective and then taken into the private sector bank, fintechs, foreign banks invested, and now you have the world's largest fast payment system, right? I mean, you had 47%, I think, I may be wrong, in 2022. You have like 12 billion transactions a month. Just amazing. So fintechs play a critical role. We compete at times, of course, right? Fintechs shook some of the banks up, absolutely, and we collaborate. When you look at our organization, Standard Chartered, we are a global network bank. So we connect the world and we bring the world to our clients. Quite often we do this together with fintechs because we cannot develop all of the solutions ourselves. So we collaborate in many instances.
Are you at least settled on one thing? Initially, as you said, Bill Gates and a whole ecosystem of leaders almost said that banks would be replaced by fintechs. But are you now sure that it's not a question of replacement? At least the central banks are batting on your side. So it's not a question of survival, it's a question of how you will perhaps use fintechs. That debate is over.
So I think, but you have to, you can't stand still, right? So you have to continue evolving and adapting, and you have to take things not defensively, but you must see it as an opportunity. It's a bit like fail fast. The most important one is you always fall forward, not backwards. So you just need to continue evolving. Yes.
Fair point. Okay, let me just scratch that point further with Rajesh. Rajesh, yesterday the RBI governor spoke about a unified lending interface. Can you say that fintechs have been able to speed up the banking process?
Oh, absolutely. I think when you look at, let's first talk about the ULI as a national infrastructure. And we'll link it to your question and the core of our topic, so to say. First of all, as a national public infrastructure, a digital public infrastructure, I think it's such a natural progression, right? Many years ago, we started talking about the JAM Trinity. And as the governor says, the JAM Trinity, and then obviously payments, UPI, we spoke about this, huge volumes on UPI. It's just so natural. I mean, it's just pure natural progression to go on to ULI next, where you have all these disparate data sets which are not talking to each other today. And I do believe that we have an important actionable there as an industry. We have GST information, we have NPCI information, we have a whole lot of digital public goods, but all of it is not easily available to everybody to still use it. And to start with the agri side, let's say the more needy segments on the agri side, small businesses, to start with that on the ULI with the banking system, and then obviously very soon it will be available to everybody, including fintechs. I think it's a huge step forward. From a very infra perspective, like I said, you can so easily get access to all data. Then let's talk about the borrower, us the individuals, right? You really look at most of these kind of transactions, it really is totally based on trust. A borrower and a lender can be in different parts of the country. They don't know each other, more so with all this digitalization and digitization that we talk about. They don't know each other at all. It's totally based on trust. And how do you develop the trust with a stranger who you don't know at all? Then it's good quality information, right? So for the borrower, platforms like this or infrastructure like this at a national level provide us the ability to represent ourselves well. I don't know what to give the lender today, and the lender doesn't know what exactly to ask me. It's all more towards convenience. If it's all digital with a consent and seamless and frictionless, then everything that the lender needs to know about me, it's so easily available, process it. So it's good for the borrower. And lastly, for the lenders, as we briefly touched upon in our chat while we were waiting, today when you look at the fintech world and a whole lot of these digital public goods and infrastructure, it's all a little fragmented again, right? So even for the lenders to take advantage of this lovely digital stack that we are developing as a country, even for lenders, it's very difficult and challenging to go integrate with each separately. You have one good unified platform. So it's a win-win progression. And coming to the fintech's point about banking, it's going to be very interesting. I was on the other side in the banks when, like he said, Mr. Gates said what he said in '94. I used to work for a bank where people used to come and say, in 5 to 10 years from now, your department won't exist, your job won't exist. Most of the people in your team won't have jobs, right? Because the technology will replace those jobs, etc. We will go through those cycles. I hear similar stuff now about AI. Right? Just like with the economic cycles, right? We all go through the cycles. When you look at it in the short term, it looks much more intense than it is. But over a long term, it all evens out. So to sum up the last point on this, I think some of this infrastructure will further help the fintechs, who in turn will further compete, collaborate, or work with the banking system. It's a win-win for everyone to progress, I guess.
as a regulator, I mean, you represent the regulator in this discussion, are you worried about technology as creating sudden risks? Like, you know, Microsoft 365 and CrowdStrike, suddenly you couldn't fly, airports, banks, everyone. What's the IMF point of view in terms of cyber risk?
Yeah, sure. So we are all aware of what happened on July 19. Windows machines worldwide began experiencing crashes due to a faulty channel update to CrowdStrike Falcon. Now, this outage was not triggered by a cyber incident. There might have been some threat actors who tried to take an opportunity, but this was really not. This was an accident. But nonetheless, there was widespread disruption that was experienced across sectors. CrowdStrike provides cybersecurity solutions that are reportedly used by some systemically important banks globally and also by critical FMIs. And so the impact on the financial sector was, while short, quite significant. So, you know, the CrowdStrike incident brought home potential systemic risks in the technology domain that are really embedded in the supply chain, notably third-party service provision, concentration in critical service provision, and single points of failure. And I just wanted to spend a couple of minutes reflecting on the intensifying cyber threat landscape and what it means for financial stability. So we presented some analysis in our April Global Financial Stability Report in a chapter called Cyber Risk and Financial Stability. And basically our view is that although cyber incidents have not so far presented systemic threats, you know, if there is a significant cyber incident at a systemic financial institution, this could pose potential macro-financial stability problems. And in fact, central banks and regulators are already viewing cybersecurity risk as a material risk and actually as a source of potential systemic risk to financial stability. Now, one thing is there, which is whether we like it or not, cyber incidents are going to continue to occur. And what this means is that when in terms of response, while protection measures, ensuring that they are adequate is actually very important, it's really what the response and recovery preparations are, which is really of paramount importance. Things like, you know, computer emergency response teams and their financial sector version, the FinCerts, and critical infrastructure protection agencies are already, but in fact in the future are going to play even more prominent roles. And you know, at the national level, governments need to engage with supply chains to minimize incidents and to establish backup arrangements, not just with tech firms, but in fact with the power and communication sectors. I mean, if you mention regulation, from a central bank's point of view, in order to do its surveillance role properly, more and more central banks should begin expanding their vocabulary of stress testing and systemic risk analysis to incorporate meaningfully cyber risk stress tests.
Michael, just coming back to this cyber risk, you know, there was a time when banks wanted to host everything in their own servers. But now you just have to go to cloud because it's simply expanded and the fintechs threw that challenge at the banks. What do you perceive? I mean, you have to share the data, you have to put it out there in the cloud. So how are you looking at this risk, which may come through fintechs, which may come regardless?
So I find the topic of cloud very interesting because there are so many different clouds. You have your private cloud, which is your own data center. And then you have a private cloud where somebody else manages the data center for you. Then you have a private cloud where you sit in a public cloud, but it's isolated, you sit in a public cloud. Let me just be clear, banks do not openly share data, full stop. We're probably the most regulated, and that's a good thing, right? We do not share data, right? So if anything we share would be metadata, completely anonymized.
I take your word for it.
So just on that one, we're not going to put on things. And so where do we, so we're in some markets, we're in the cloud. So I'm rolling out a latest tech stack global payments platform, which is already in India because India is a very demanding market. So you want to be in the latest technology that is cloud native. It is microservice enabled. You can parameterize it. It is a great system. It does sit in the cloud in India. It does not sit in the cloud in a few other markets because of local regulatory concerns or, shall we say, considerations. So it's not one or the other. It is going to be all together, right? And more countries do actually go and require data localization, but it doesn't mean that you can't have it in the cloud. Because there's no such thing as a thing in the cloud globally, right? I mean, the data sits either in the country, like India is data localization, many other places are, and so we had to put more servers in here, which is a good thing, right? And fully understand where they're coming from. And then there's more global sharing, but generally it's anonymized, and that is something that probably will go from a supervisory perspective, will probably broaden beyond the banks over time, because that's one of the considerations regulators or supervisors have, that there's a bit of an uneven regulation at time, right? And as you said, I mean, you don't regulate some of the large tech financial services back at the home country because they don't want to become a bank or a fintech at home, but outside they do that. And I think that will get harmonized over time. At the end, I just want to emphasize that again, it is the collaboration that's going to make this all work. None of us can do that on our own. Also not the large tech companies. They probably have most of the resources. I want to say one more thing to fintechs. And our previous, or two previous speakers, and I have to look up. So Sri Mahavir Singh said something very interesting. He said the private sector and fintech are critical for further development and inclusion. I think fintechs have brought a massive benefit to financial inclusion and make more people bankable. And this is a great success and a great benefit we drive, and we can actually benefit from this together. So I think that's a good thing.
Rajesh, I think the big point, and you are, in CIBIL, you are looking at credit scores or designing credit scores. Do you think the big support that fintech can give to the entire financial sector is improving diligence?
Oh yeah, absolutely. I think that's very important. One of the key points, or I would say answers, that I am yet to be fully convinced about is the differentiation that fintechs bring to the traditional banking system, or let's say overall across the products and whatever business models. So what exactly is the differentiator has to be defined well. I think so far what we have seen a lot of is convenience for sure. And because the fintechs operate primarily in the digital world, obviously there is much quicker processes, right, versus the physical processes. That's a no-brainer. So when you talk about due diligence, I think a lot of work to be done there. We spoke earlier about these nice platforms and data sets, but the real usage is to come out. And few areas where I think it will help when we talk about due diligence, right? We're talking about new to credit. And we know that in India, given our goals on financial inclusion, given our demographic composition, right, such a large young population.
Given our informal economy,
credit as
you don't
well.
think that fintechs will
Absolutely. There's such low credit penetration. This is where I think there's a huge opportunity for fintechs, MSMEs again, right? And we'll link all of this to due diligence to say that how do fintechs use their innovations and their superior technology to bring in this due diligence, right? Now, it can be traditional data, it can be alternative data, it can be behavioral data, obviously within all constructs of privacy and consent-based, right? So I think when it comes to due diligence, what new information can you bring which can give more confidence to lenders? And my last sentence on this, I think the fintech world we can probably say that the fintech world has really arrived or reached its point of arrival. I think I would kind of accept that on the day when we say that new to credit versus existing to bank. On the day that we say these two have been equated. Because the only real difference is only information. Lata could have an account with a large bank. She could have a savings account, credit card. She could invest through that bank. They know everything about her. It's easy for the bank to do due diligence on her, right? But let's say there's a youngster who's just got his first job and he doesn't have that many accounts with a large bank. That's a great opportunity for fintechs, but that is the real innovation for me. I think just information moving quicker for a faster process, it's just the beginning then.
But it looks like Jack Smith doing more of what he does, which is filing these absurd lawsuits in an effort to influence the election. The president doesn't have some level of immunity in how he conducts his office, in the same way that judges have to have immunity, police officers have to have immunity. There has to be some recognition that people can't be sued for doing their job.
So help me God.
Hello and welcome to Business 360. I am Ashmit Kumar and here are the headlines that we're tracking this evening. Reliance Industries is transforming into a deep tech company with advanced manufacturing capabilities, says Chairman Mukesh Ambani at the 47th Annual General Meeting. Adds that the conglomerate is on track to more than double in size before the end of this decade. The Reliance board will consider a 1:1 bonus issue on the 5th of September. The move to reward shareholders takes the stock higher in trade. No word on the potential listing of Jio and Reliance Retail. Nifty hits a record high and closes at a new peak for the 11th straight session. Sensex gains 350 points, but mid-caps underperform. Block deal worth 11,000 crores in Interglobe Aviation. Over 2 crore shares worth 6% stake change hands. Co-promoter Rakesh Gangwal is the likely seller. Post today's share sale, Gangwal in last 2 years has sold 23% stake worth 27,000 crores and he still holds 13% stake worth 25,000 crores. SEBI chief Madhavi Puribuk makes her first public appearance since the Hindenburg allegations, promises to ensure no delay in approving IPO applications at the Global FinTech Summit. Israeli forces strike refugee camp in West Bank on the second day of its assault. Israel claims it killed 5 militants during yesterday's raids. European Union officials warn Israel not to extend the war in Gaza to the West Bank. OpenAI is in talks to raise funds which could value the company at $100 billion. Sources tell CNBC Thrive Capital is likely to lead the round with $1 billion investment. Well, with one eye on embedding innovative technologies in every single business and another on powering India to a leadership position in green and clean energy, Reliance Chairman Mukesh Ambani laid out the conglomerate's roadmap at their 47th annual general meeting. Ambani said that Reliance Industries is transforming into a deep tech company with advanced manufacturing capabilities. He added that the conglomerate is on track to more than double in size before the end of this decade. The Reliance board will consider a 1:1 bonus issue on the 5th of September. The move to reward shareholders took the stock prices higher in trade. Reliance Jio will roll out AI cloud services from this Diwali. It will offer 100 GB cloud storage for as free as a welcome offer. Jio aims to double Jio revenue and EBITDA in 3 to 4 years. Mukesh Ambani also said that new energy businesses will be the new jewel in Reliance's crown, as he announced plans to set up a multi-gigawatt electrolysis manufacturing facility by 2026. Here are the key highlights from Reliance AGM.
Firmly believed that you are the backbone of Reliance and that you deserve a substantial reward from time to time as your company grows from strength to strength. I have supreme confidence in the robust performance and the bright future growth prospects of all our businesses. Based on this confidence, I would like to share some good news with you today. At 1:45 p.m. today, Reliance Industries Limited has sent a notice to the stock exchanges that the board of directors will meet on the 5th September to consider issuing bonus shares in the ratio of 1:1. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards R&D, taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses.
The Jio Home app is your personal control center, letting you manage everything in your home, from your Wi-Fi to your smart devices with just a few taps. Because your security is our top priority, Jio Home app includes features like malware detection and guest Wi-Fi management, keeping your home network safe and secure.
We opened 1,840 new stores this year, bringing our total store count to 18,836 stores, with a retail space of 79 million square feet in total. With the strong foundation we have built, I am confident that we will achieve our goal of doubling our retail business in the next 3 to 4 years.
Well, moving on to the market action. Sensex and Nifty ended higher, even as mid-caps underperformed in trade today. The Nifty hit a record high in intraday trade and also ended at a record close for the 11th straight session. Mid-cap index ended in the red. Nifty Bank Index ended flat. Surbhi Upadhyay is joining us now with a quick wrap of the day's market action. Surbhi.
Well, not a bad Thursday at all, with the Nifty managing to inch now closer to the 25,200 mark. Yes, 25,199 was the day's high. We didn't quite close there, but nonetheless, the Nifty did manage about a 100-point pop. Now, the interesting facet is that India actually outperformed a lot of the gloom that we were confronted with in the morning on the back of the Nvidia results. So we did fairly well looking at the regional markets. And the other important trend is the move from mid-caps and small caps mid-caps towards large caps, and that's getting more and more pronounced. In fact, to start with, let me give you the stats so far this week. The Nifty is up 1.3%, the mid-cap index is up just about 0.5%, and that trend continued on Thursday as well. In fact, the weakness in mid-caps was fairly pronounced. The index was underperforming, it was down about 0.5%, and the advanced decline ratio was quite weak. There were almost 2 stocks declining for every one that was rising in trade today. Let's actually go back to large caps, because that's where the good news is, and talk about some of the key movers and shakers. Tata Motors had a dramatic move, in fact, in top gear, and how the stock ended at the day's high with some serious thrust, almost a 5-6% increase. Other big Nifty movers or leaders included names like BPCL, the Bajaj twins, Bajaj Finance and Finserv, both having a good session, HCL Tech and ITC. And then let's talk about the newsmaker of the day, and that has to be Reliance Industries, really cheering the street with the news that the board is going to be considering a 1:1 bonus on the 5th of September. The stock took the entire market higher with it, with a gain of almost 1.5%. Bringing up the red side, names like Grasim, M&M, JSW Steel, these were the key underperformers. And the bank Nifty is a bit of a disappointment. It again underperformed, ended flat, and didn't really contribute to the Nifty's tally today. Coming to mid-caps, the profit-taking that I'm talking about and the slight weakness, this was showing up in stocks like Ola Electric, which was down 4-5%, NIIT, which has had a stupendous run in the last couple of days, Walkard and stocks like Zentech, they were on the weaker side. Talking about some movers and shakers on the upside, TV18 and Network 18, with the caveat that, of course, these are companies that run and operate the channel that you're watching. Both these stocks were up because of not just the AGM excitement, but also the fact that the Competition Commission of India approval has come in for the Disney Reliance Viacom merger. So if we talk about the other gainers then, KC International, Godfrey Phillips, with the feud raging, the stock is also raging higher in anticipation that maybe there's going to be some corporate action at the promoter level. So that was up and about. PNB Housing and GSPL were some of the other noticeable winners of the day. Now, when we come back to trade on Friday, the market will watch out for Wall Street reaction to key earnings like Nvidia and Salesforce. And also, we'll have the PCE inflation numbers out of the US on Friday. So that remains a watch point as well.
Right, Surbhi, thanks so much for that. Now, SEBI chairperson Madhavi Puri-Book has said that the market regulator is ensuring that there is no delay in providing approvals to fintechs for their initial public offerings. Speaking at her first public appearance since the Hindenburg allegations was released at the Global Fintech Fest, Book added that SEBI does not want companies to wait for approvals when there's so much opportunities in the capital markets.
We have been focusing on saying that if the fintech industry has reached a certain level of maturity and now they want to IPO, the private equity investors want to exit, the markets are good, this is the time when we should not be wasting time in giving approvals. So as you're seeing, compared to when we started tracking in March of 2022, and we had a very large number of IPO papers pending more than 3 months, today we have just 8. And most of those are really in the realm of where there is either a judicial intervention or there is a regulatory approval pending from another fellow regulator, and which is why they are still pending at our end. We ensure that people are not wanting and waiting for approvals when there is so much opportunity in the market. So any of the fintechs coming to register in this form will also see that this speed of approval should be there by SEBI. This speed and this, monitoring of aging is something that we've been doing more through restructuring of the organization and through process optimization. So we are hoping that, in fact, a lot of that aging that you saw, we can make it crash even further, because we will now actively use AI within SEBI itself in order to deliver this.
The government has allowed companies to list directly on international exchanges within GIFT City's IFSC with a minimum public float of just 10%. This is significantly lower than the 25% requirement for listing on domestic exchanges. Sapna Das joining us now with more details. Sapna, take us through this government plan for a lower minimum float.
Well, no doubt this is an important tweak done by the government to help all those unlisted companies raise foreign capital from the IFSC. So the minimum IPO size has been, reduced to 10% Otherwise, under normal circumstances for listed companies on the BSE and the NSE, it's up to 25% is the minimum public shareholding norm, but that has been tweaked and kept at 10% for all those companies interested in accessing foreign capital from the IFSC. The rationale for this is also very clear. This will help not dilute promoter ownership. This will also help those companies have access to higher voting rights, which is what the feedback is in terms of what the investors have been telling the government, and hence a 10% IPO size is what has been mandated. So they need not go right up to 25% simply for the rationale that I have explained. But it will depend company to company in case they want to raise or rather they want to dilute their stake further. That would be up to them. But a minimum 10% and maintaining at 10% in the years to come is good enough as far as the Government of India rules are concerned. That's one. Second, this is going to be a big boost for the sunrise sectors, especially e-commerce, tech companies who are in any case attracting foreign capital in some shape or the other, and if they're interested, they can do it now directly by listing at the IFSC. Last but not the least, we are given to understand that under MCA there would be around 5 to 6 lakh odd companies, out of which barely 5,000 are listed. So this is a big step as far as the unlisted Indian companies are concerned, for them to help raise funds in any of the hard currencies that they would like.
Thanks so much for that, Sapna. Now, around 6% stake in Interglobe Aviation was offloaded via a block deal. More than 2 crore shares worth 11,000 crore rupees changed hands at the bourses. Indigo promoter Rakesh Gangwal is the likely seller, and with today's sale, Gangwal sold 23% stake worth 27,000 crore rupees in the last 2 years. Sudarshan Kumar joining us now with more details. Sudarshan.
That's correct. So today, Rakesh Gangwal, who is one of the co-founders, likely to have sold 5.8% stake worth rupees 10,300 crore. Remember, yesterday when the term sheet was out, firstly, the block size was rupees 6,750 crore. Later on today morning, he has decided to increase the block size to rupees 10,300 crore. And the block deal likely to happen rupees 4,715 per share, which is 2.7% higher against the indicative price, which was 4,593 per share. And there will be a 150-day lock-in period post this tranche of stake sale, which is likely to end in January 2025. Since September 2022, when that was the first time Rakesh Gangwal had sold stake in Indigo, he has sold 23% stake, and now post today's stake sale, he still holds almost 13.6% stake worth rupees 25,000 crore. Now talking about the stock performance, since September 2022, the stock is up almost 150%, and since the last tranche of stake sale, that was March 2024, the stock is up 50%.
Well, speaking of block deals, shares of PB Fintech rose in early trade following a block deal on the bourses. Over 2% equity changed hands at 1,660 rupees per share. This is a 4.5% discount to Wednesday's closing price. While the buyers and sellers in the transaction are not known officially, sources told CNBC TV18 that Tencent Cloud Europe BV was likely to have sold around 97 lakh shares in the company. The deal will likely be subject to a 60-day lock-in period for the seller. And meanwhile, Adani Power has refuted reports that it is supplying costly electricity to Bangladesh. Sources have told CNBC TV18 that the company claims it supplies the cheapest power among all imported coal-based power companies. Abhimanyu Sharma joining us now with more details. Abhimanyu, give us a sense, what are the claims being made here by Adani Power?
Adani Power has refuted media reports of supplying costly power to Bangladesh. The company has cited data from the Bangladesh Power Development Board in which it has given a comparison between the cost of the power supplied by the company to the cost of power supplied from other imported coal-based power plants, namely Pyra and Rampal, which supply power to Bangladesh. The company has also said that the average monthly billing of its Goda plant in Jharkhand, which supplies power to Bangladesh, is between 90 to 100 million US dollars, and though the company is continuing to supply power to India's neighboring country, it will find it difficult to continue doing so if at all its pending dues, which are currently mounting if they are not clear at the earliest, since the company requires upfront payment not just for several other people in the supply chain, but notably lenders and suppliers of coal.
Right, Abhimanyu, thanks so much for that. Now, time now for a short break, but up next, the Uttar Pradesh government announces a new policy with financial incentives for digital influencers who promote the state government schemes. More on that when we come back. Welcome back. Now, the Uttar Pradesh government has rolled out a new digital media policy that will pay empaneled influencers for promoting their schemes. However, there are several riders and conditions in place. There are penalties in place for empaneled influencers under the IT Act, as well as if they upload objectionable content. Shivani Bajaj decodes the Uttar Pradesh digital media policy for us.
Well, yes, the Uttar Pradesh government has approved a new social media policy that combines lucrative incentives for influencers with stringent penalties for objectionable content. Under this policy, influencers promoting government policies can earn up to 8 lakh rupees per month, depending on their follower counts across platforms like X, Facebook, Instagram, as well as YouTube. Now, the Uttar Pradesh Digital Media Policy 2024 is designed to provide advertisements to individuals and agencies that create and share content about government schemes. Influencers will be categorized into 4 groups with their earnings determined by their reach. For instance, on X, influencers can earn up to 5 lakh rupees per month, while Facebook and Instagram offer caps of 4 lakh and 3 lakh respectively. YouTube content creators could see payments up to 8 lakhs for standard videos, 7 lakh for shorts and 6 lakh for podcasts, with other content types capped at 4 lakh rupees. However, the policy's incentives come with strict regulations as well. Content deemed anti-national, obscene or otherwise objectionable could lead to severe consequences, including life imprisonment. This aspect has sparked concerns over potential restrictions on freedom of expression. However, remember that these restrictions are in place only for influencers collaborating with the Uttar Pradesh government for the advertisement campaign under this new policy. It is not a blanket rule applying to all influencers in the state. In addition to the financial rewards and penalties, the policy envisions a system of registering agencies tasked for promoting content related to the state's achievements. These agencies will work alongside influencers to amplify the government's message across digital platforms. So all in all, Uttar Pradesh government is looking to use the reach of influencers to market its own campaigns and the state's achievements. Back to you.
See, on one hand, the policy, as was rightly pointed out, is limited to those influencers empaneled with the UP government. To say that, the policy in any manner lays down stringent restrictions or limitations would be a little misleading. It merely references the IT Act and says that if you violate the IT Act, you run the risk of losing your empanelment and other legal action.
All that the policy says is that if you are an influencer empaneled with the government and you undertake certain activities which are illegal in the sense that you have actually put defamatory content, not so much defamatory content, you have put content which violates any of the legal rights, which is illegal, or it is terrorism oriented, which affects the security of the state, then the government can actually prosecute you. But prosecute you under what? Prosecute you not under the policy, but prosecute you under the law of the land, which is the Information Technology Act. 66F of the Information Technology Act provides life imprisonment for cyber terrorism. 66E for violation of privacy provides a 3-year imprisonment. Therefore, there is no problem with the policy at all. The policy dovetails itself to the law of the land today. And I think the state has the freedom to do what it will in terms of publicizing its achievements.
Well, here's some international news. Tensions in the Middle East continue to rise. The Israeli military has killed at least 68 Palestinians and injured 77 in the last 24 hours. According to Hamas-run Gaza Health Ministry, the Israeli military conducted a